Beyond every dip and bend, we can't be fazed by your sticks and stones. Trapping in lemonade, made it all by this day. Don't know if I could do it alone. Cross with your truth to bear. Show me what's under there. Why play it safe when we could love? Why? Give me what we both came for. Ripping up what you're so scared of. I promise next time we play, come on and we'll see. Are you ready with me? Are you rolling 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 with
What's going on, everybody? Testing, testing. Hello, hello, hello. All right, looks like I'm working. Hey, Skydive, welcome to the stream. 1 second. Oh. Got music in 2 different places. There we go. Skydive, what's going on? Sankus, welcome to the stream, man. Nice beat. Yeah, I like this playlist. Hope everybody's having a good evening. Late stream, but we're doing it. The 7 days a week is a little challenging, but we're going to pull it off. And here we are. Haven't missed a day so far. What's going on, Michael? Welcome to the stream, brother. One moment. Hello, hello. Hello. Whoa. All right. Let's see who else we got. I'm expecting a couple people from the group to pop in. Let's see. Let's wake everybody up in the Discord group. Good, Carson's still slacking. Not much, just watching the market drift up and down. Amen. Same. I mean, when you look at Doge, I guess we can get started. So when you look at Doge on the 1 minute time frame, you're like, ooh, we're going up here. But when you look overall at what's going on, it's not actually so great. It is not actually so great. This is the same song that played last time when I was trying to explain. I had to turn the music off. Hold up. Is there anything less lit? Okay. So yeah, when you look at Doge on the 1 minute time frame, you see all this volatility. You're like, ooh, okay, cool. But when you notice what the swing here from here to here was, it was literally 1 full cent. That was it. All right, this is only 1 cent. So this move right here is like half a cent. Nothing at all. Let's put this into perspective. All right. Let me zoom out some, Weeble. Whoa. This is the volatility and the price action for the last 11 days starting here. I mean, at the moment, over these last couple days right here, we have not been doing like anything. Hey, what's up, Preezy? Welcome back to the stream. We have not been doing anything at all. Look at this sideways trading. It's pretty depressing. All right, we did get some movement, a dip down to 28, which was kind of the absolute low recently. And then we just ended up trading sideways again. I'm going to actually get rid of some of these trend lines because they're just kind of distracting. Here's the deal, guys. Here's the quick rundown. Unfortunately, there's not too much to talk about tonight. I'm kind of just getting the stream off to see how everybody's doing, do a quick go over everything. But there is not much to talk about tonight. Now, as for tomorrow, let me pause the music. As for tomorrow, we might have some stuff to get into. I'm expecting what we already talked about, some volatility tomorrow. Being that it's going to be Memorial Day, there's probably going to be some traders that are looking for something to trade. But of course, the stock market is down. If not everybody is looking for a day off, some people are trying to find some money. There might be traders that come into the crypto space for tomorrow. Because of that, we might see some more volatility in the crypto market tomorrow. That's my guess. That's my hope. If not, it's going to be a dead tomorrow, and then we'll pick up Tuesday. But I fully expect some movement tomorrow. So that's kind of what we're looking at. And we talked about that yesterday as well. If you just look at just a brief overview of what's happened in the last week, we did have one dip down to about 24 cents. If you scooped that up and held it, cool, good for you. I wish I was you. I mean, we called that dip, but I did end up scalping it, so I don't have that same average. Actually, right now, I'm not even in. I'm just waiting. Then we made some moves up, went throughout this channel, broke out the top side, kind of faked out that way. Actually headed towards, oh yeah, this is when we moved towards 38 cents right off of Elon's tweet. You can see here, it was at 33. He sent out a tweet with multiple pieces of hype information, calls a quick bump up of 5 cents. And that just has been fading off over the next couple days, all right? Because it was just hype. Hype does not keep the price up unless it is also like a lasting good piece of news. Hopefully we will wake up to 40. What's going on, Advantage? I agree with you 100%. Hopefully we will get up to 40 cents. This is torture right now, not going to lie. I wouldn't mind some 30 to 38 moves, like 30 over the next couple days, hit 38, let us cut, drift back down. I don't mind the volatility, but just give us something to make money off of. What other cryptos do I think are a good buy right now? There's a lot of other good cryptos that I think are a buy right now. Let me get to that in just a moment, Michael, because that's a great question. Preezy, I'm hearing so much Bitcoin is down, so it's a bear market because Bitcoin is the market leader. But what if this change of the guard and the bull run is waiting to be led by Dogecoin? That would be crazy. Unfortunately, Doge, I mean, it's just not, I don't want to say important enough, but it's kind of not important enough at this moment of a coin for anybody to really follow it like that. But that would be cool. That would be cool. Dogecoin becomes the market leader. I'd love to see it. But we'll see. Bitcoin is having a moment, that's for sure. It's having quite the moment down here. And it's not looking good. That's what I wanted to talk about next. Now, if you look short term on Doge, this is kind of looking okay. Couple, it had a deep dip, a couple dips here. Now it's catching, trying to make some moves up again towards the 31 cent mark. But it's just not looking good. While Dan Penna just did a full suplex on Bitcoin. Did I see it? No, I did not. Is it on Twitter or something?
You would run as fast as you fucking could to sell it. I know. If you knew who was really behind Bitcoin,
Is this what you're talking about?
you would run as fast as you fucking could to sell it. I know. 100%. If you knew who owned Bitcoin or who started Bitcoin, and you had Bitcoin, you couldn't sleep at night. I know. 100%. And when the real founder of Bitcoin comes out, it is my humble opinion, and there's nothing humble about me, Bitcoin will go to fucking zero.
Oh, my volume's probably really quiet.
One day.
And a microsecond, whoop, like that. If you knew who was really behind
Yikes.
Bitcoin.
That's interesting. Okay. Can't hear? Sorry. Yeah, I realized the volume was all the way down. He basically said, if you knew who was really behind Bitcoin, he's like, you would sell it. He said, I know who's behind Bitcoin. And he said, if you knew who was behind Bitcoin, it would go to zero in a microsecond. It's on YouTube? Okay, I'll look it up after this. So, yeah, short-term Doge, whatever, right? This doesn't really look interesting at all. Big sell-off, hit off the obvious support line, no surprises there, and now it's just trading sideways here. It kind of is doing this little M thing. That's usually not my favorite thing to see. Seeing it make like that double top where it hits the top twice and it has equally bad bounces off of that resistance line. So we'll see what happens. Typically, when you see something like that, like here, one, it does the one hit, two hit, kind of makes the M. It tends to keep going down. One hit, two hit. We'll see what happens. This might just trade sideways and go up a little bit. Can't really predict that. It's not much of a pattern, but the guy just likes to hear himself talk. Yeah. I mean, I could tell. Usually when people pause for dramatic effect that much, they're just kind of enjoying themselves. But I mean, he sounded pretty serious, so I don't know. But when you look at Bitcoin here, imagine. Actually, I can disable my indicators, can't I? Yeah. Let's hide all drawings. Oh, lifesaver. I did not think about this before, that I could do that. It seems like everybody's waiting on Dogecoin Catalyst to get this back started, but if it's based on Bitcoin, wouldn't that mean regardless of Catalyst, we wouldn't move? So here's the thing. That means regardless of really hype tweets from Elon, we're not really going to move, okay? Because each time Elon does tweet, we get some hype, we move like a couple cents, and we just yoink right back, all right? For example, right here. Perfect example right here. Right here. All right, hype tweet from Elon, we were right here. We had just broken out of this downtrend. We're making little moves up. Elon tweeted right here. Kind of got a big move, about 5 cents. Look at what happened after that. Did not hold. We've been selling off ever since, and now we're finally caught at 28 and started trading sideways at 29. So this is what's going to happen every single time. Big move up. It's not going to hold, though, because we just start to correct after the hype tweet. Now, if you're talking about an actual catalyst like news, that will keep us up. That will bump us up, and it'll hold us up because it's actual news. Hype tweets will fade off. Catalysts will bump us up, hold us up, and then we'll start following the Bitcoin pattern from where we end up. Now, our potential for where we could go is still not going to be as high as it could be because of Bitcoin. So think of Bitcoin as like a minus 20 penalty, a minus 20 cent penalty on Dogecoin's price. We can still move, but our potential is like handicapped to minus 20 cents until Bitcoin decides to recover. Because how we're consolidating at 30 cents, we were consolidating at 50 cents comfortably. Do I know who pinned it? No, I don't know who he is. MJ's. We were consolidating at 50 cents comfortably, and now Bitcoin's crashed and is at a much lower price, and so we're at a much lower price consolidating. Once Bitcoin goes back up, we'll end up back up and consolidating where we belong when Bitcoin isn't in this crash state. But no, news will definitely move us, but it has to be actual good news that is important. Hype tweets and stuff that don't really mean anything will just be very, very temporary, and we'll just start to correct back down. Looking at Bitcoin, this is what I don't like, okay? Take a look at this with no indicators on here. Clearly, you could see things don't look good. Why do I say that? Big rundown, rejection. Tried to get up out of 40s, failed it. Tried to get back up to 40, didn't even make it. Sold off super hard, made another lower low. Lower low, lower low, lower low. Finally got a big rejection out of there. Oh, maybe that's the bottom. Runs out of steam at 40,000. Okay, pullback. Tries again. Runs out of steam at 40,000. Oh, pullback. Tries again. Runs out of steam at 40,000. Everybody's like, all right, it's not happening. Sells off. Weak pullback. Another weak pullback. Now it can't get above 37.5. All right. Now it can't get above 37.5. Then we sell off even more. All right, guys. Low, lower low, lower low, lower low. Then we make a pullback up. A little bit of a rebound here. I say pullback because I was talking about the downtrend. Any change of direction is a pullback from the direction it was going in, but you know what I mean. Then we go up here, lower high than the previous highs, okay? Not what you want to see ever if you're trying. Unless you were shorting, that is not what you want to see, all right? Very bearish. Lower lows and lower highs. The classic signal of a downtrend, all right? So we are back in a downtrend here. Let's just get the trend channel in case anyone was confused about it. Okay, that didn't stick. Check that out. It's a downtrend. Clear as day. Not fun, right? All right, let's go back to hiding indicators and drawings. And then, look here. Made the pullback, lower high, lower low, lower high, small pullback. Tries again. Does the little double top thing here. All right, let's see. Do you guys know what a double top pattern is? If not, let's look it up. Double top pattern. Basically what ends up happening. This is the significance of a double top. It ends up shaping like an M. What ends up happening, you go up, try and break a level, you fail, you make a pullback. Try and get to that same level again, run out of steam at the same exact spot, can't break it a second time. And then you run out of steam and you fall back down. That is a sign of weakness. So what do people do when they see a sign of weakness and they've been holding since the bottom? They say, oh, probably a good time to cut. So everybody sells. And so then you end up going back down. That on an uptrend is a bearish sign. It is a signal of a reversal. So now when you look here, really anytime you keep butting your head against a top level and you keep failing and pulling back, trying again and failing, that just shows you're too weak to make it through. So what does that tell people that are holding, looking for a sell point? All right, probably not going any higher. So they sell. Then you get the big sell-offs. Here, another double top. 1, 2, sell-off. Here, 1, 2, sell-off, right? See the trend? It happens a lot. Sometimes you even get the triple top action, but usually if it's a triple top, it ends up being head and shoulders. So one attempt, one's higher than the previous, and then the next one can't live up to the previous one. And it just shows that they tried, but then they ran out of steam. Anyway, once you get past this double top here, again, look at this sell-off right here. This sell-off does not look good. Does not look good. Right here. I have a lot of drawings. That's why I keep hiding them. Because, like I said, you can do the technical analysis without needing a single indicator on your screen. People overcomplicate it. They have the RSI, the MACD, the volume, the 200 EMA, the 10 EMA, the 50 EMA, the Bollinger Bands. And that's just their basis, right? That doesn't include what they actually might also want to use on top of that. Too much. You should be able to look at the chart with no indicators on and just be like, okay, obvious, obvious, obvious. So this obviously looks bad. Now, why does this look bad? All right. First and foremost, because, I mean, the most obvious thing, this is on the 1 hour time frame. And look at how steeply that's coming down. It's like a roller coaster going up and then fall off the the drop off there. As you continue to drop the time frame, it doesn't particularly look any better. Actually, it kind of looks worse. It's getting steeper and steeper the lower time frame I go. Now, as I get lower and lower in the time frames, you could see more of the candles. You see there were some attempts they kept trying, these little buyback attempts, just failing. And look at this monstrosity right here. Look at this. Is that bearish enough? In my opinion, yes. That's pretty freaking bearish. Not looking good. Wow. Okay, look at the 1 minute time frame. Look at these red candles. First, and we'll get rid of this purple here now. First, here. Oh, what's going on? Whoa. Drops. Just constant. Then this like steep uptrend attempt, and then this nasty fall off here. Okay, another one. Consolidation. And then this. Crazy. All right. Things are not looking good if you're wanting to go up. And this is on Bitcoin's chart, by the way. Let me catch up real quick before I continue. He owns a castle and trains the top business people in the world. Maybe I can get lo-fi on, so y'all don't have to endure just hearing my voice. He owns a castle and trains the top business people in the world. Wow. I didn't know. Yeah, tweets not real catalyst. Right. Real catalyst will move us up and hold us. Tweets, the typical Elon tweets might give us a couple cents very briefly, but then we fall right back down. Michael. Oh, John, good thing I came here. Hey, appreciate that. Michael, yeah, we're on Bitcoin's coattails right now. I don't think we'll get any news boosts until the market starts to go up again. The news can give us a chance to gain ground on Bitcoin, yes. Appreciate you, John. Thank you for the fine, kind comments. MJ's 34.4. Yeah, it's looking bad.
I just want to go back.
Music's oh God. I'm sorry, guys. I had the music at the desktop audio volume up for the video. Sorry about that. When y'all said you couldn't hear, and I turned it on max, and then I forgot. I'm struggling tonight. Sorry, guys. People claim that Doge can pass Bitcoin. Y'all's eardrums are probably... People claim that Doge can pass Bitcoin, but in order to do that, Bitcoin would have to come down or Doge will hard cap the coin. Otherwise, it's not possible. This is the best shot to try and pass Bitcoin. Yeah, even still, we're not even close. Can't hear me? Hello? Should be able to hear me now. Yeah. This is our only chance to pass Bitcoin. Thing is, once you go to coinmarketcap.com, we're still not even close. And we're about to do that in a minute. Doge isn't being affected as much. Yeah, Doge is really trying to hold its own. That's why I said even if we go like Bitcoin 20s, like high 20s, Doge is not probably going to get back down to 19 cents. It's not a one-to-one move anymore. That's Ryan Mata and his team shorting Bitcoin, by the way. Oh my God. Now we can? Okay, cool. Sorry about that, guys. All right. So here's my whole point of analyzing that move. Okay? To the moon, yeah, that's a little optimistic, Mariano. It's a little optimistic right now. Hey, but we'll keep dreaming. Look at the price action here. Just take a look. Take a look. Maybe I'll get rid of this line, make it a little less complicated. Here's the overall resistance level horizontally. Kind of that's been going on before even this little trend was formed here. Right around 40,000. And the support right around 33.5. Multiple touches, consolidation, rejection, consolidation, a few rejection wicks, and then more consolidation rejections here. All right, so the most activity at the lowest point here was 33.5. We are tending to not really want to go above that and not want to go below it, regardless of what happens in the upward trend channel here that we formed recently. As you look at the upward trend channel, yeah, we are still hanging out in there, just bouncing around. But this particular last sequence of moves here is what's the most concerning. As you take a look, after this fall through here of the, and welcome to the stream, everybody. If you haven't liked already, please consider liking the live stream so we get some more people in with us. All right, so after we broke through this trend channel here, as you can see, we stayed in it for a while. Ever since, we've been really, really weak, and we have not gotten back up to the line. We have not gotten back up to the top trend channel line, not even to test it and bounce off of it as resistance, which is concerning, okay? We've been that weak since we fell through that we never made it back up to touch it and even, like, tap it before we headed back down. That's bearish. That's very, very bearish. Not good. If you look at it from a horizontal perspective, like I said, double top on these pullbacks, really, really, really deep pullbacks, which just show the amount of selling pressure and the lack of buying pressure keeping us from falling that much each time we hit a level. It's just like everybody is selling. Look at this. Crazy. Overshot the support line on the trend channel, overshot the support line on the trend channel and the actual 33.5 level, came back up, and just all this weakness, making lower highs, making lower lows, and we are failing to cover any significant amount of ground here. If you put this line back, look at this. After this bounce, we should have been heading back up towards this to do one of these moves, at least. And thank you for that like, whoever just liked. Now we're at 7. We should have at least been able to have enough momentum to get up to this line and bounce around, all right? But we're not even halfway there. If I split this in half again, I'm trying to make it actually half. Only this little wick got to the halfway point. The whole rest of this trading action didn't even make it halfway up the trend channel, the bottom half of it. Very bearish yet again. All right, what else? Look even more recent term at this particular move here. All this rejection. Okay, when you get a clean rejection off 2 intersecting supports, because it went through here and here. When you get a clean rejection off two support lines, that usually means that you have 2 groups of potential dip buyers that have been waiting for an opportunity, buying in at the same time, which will then propel you really strongly out of the hole. Whoa, didn't mean to do that. Just like here, for example. No, we didn't have 2 intersecting, but this is the kind of move you can expect. Big move. Here we had extremely weak move, didn't even make it halfway back up the bottom half of the trend channel, and it's already failing again, steeply came back down to the trend line support. And it's showing extreme signs of weakness, even at this relatively low price level here. With the way that it's sold off and it's coming down so hard, It's not even slowly approaching it. It is coming in hot to it like it wants to blast right through. Now you can see by this candle right here, dip buyers that are expecting, like always, expecting a bounce at the support line are trying to give it a try. And they are buying it up, trying to right here. What you can also see, though, is that this candle, even though it's been going on for minutes now, is still somewhat of a Doge candle, which is when, in case you don't know, you get a candle with like a wick on each side and the body's like really small right in the middle. It's usually a sign of indecision. It means that people tried to buy it up, didn't quite make it. People tried to sell it, didn't quite make it, and kind of torn between buying and selling pressure, kind of somewhere in the middle. So you never want to see a candle end with all this wick on both sides and a little teeny weeny body. The way it's shaping up right now, that is the way that the candle could end. If it does, and it's at support, and people don't know if they should buy it or sell it, that's a pretty bad sign. You should really only see a big green candle forming here, taking off. Now, as the next couple minutes go by and this 30-minute candle finishes forming, we'll see what it finishes at. Could end up getting out of this area. But I'm just saying, so far, not good. You would expect to see way more strength than that, normally. So we'll see what's going to happen here. Another thing to consider. Let's get rid of some of these trend lines here. And now start looking horizontal again. So look for more support lines horizontally. Let's see here, a little bit of a over move here before it got scooped back up. Here, almost here. All right, so probably something like a line. Well, really, you could put the line here if you really wanted to. Because, I mean, you could look at all these wicks. Either way, 36,000 or 36.3. I don't care where you put your line. Either way's fine. Notice here, now you can see what's happening. This double topped at this line. Seems like people are waiting for deeper discounts. I know I am. Yeah, that's the thing, Michael. And that's a bad sign, because if we keep hitting support all these times and people are still not buying it up, they're not convinced, eventually all the buyers that were buying it up are going to realize, all right, well, none of these times we're hitting support. Are we really getting any pressure? Maybe I should just sit back and wait it out. And so eventually these support lines will get weaker and weaker because there will be less buyers waiting there to provide that support. And so then the price will fail. The sellers will take the lead and end up with their selling pressure pushing the price down. And so we'll possibly see some new lows here. Probably get back down here, fail this line, and head back to 31,000. May see a big bounce. If we're really, really weak, we may go back down to 30,000. I don't know. But that's going to cause a whole nother set of problems because we're supposed to be getting out of here soon. That's our hope, right? If we start setting new lows, it is not putting us back on track to get out of here. It really isn't. This right here was already bad because it made an equal low here. You want to start seeing higher lows. I mean, yeah, overall, we're still making a higher low, but like you would have wanted to see this stop here. Clear signs of upward movement. We're not seeing it yet. It's starting to look like it's starting to trade more horizontally again and wants to start ignoring this upward trend channel. And once it starts ignoring the upward trend channel, then we're no longer trending up. Long story short. Then we're trending sideways. And that's a bad sign because we want to trend up and get out of here. If we're going to trend sideways instead of up, if we're going to ignore that trend, then probably that's because we want to start going down. So we'll see what happens. But like I said, we're getting sandwiched into this triangle here that's getting formed as we start respecting this 36,000 level of resistance, which is pretty bad because that's actually pretty low. Thank you again for whoever just liked. So we're either going to fall out the bottom here, or we might see some movement like this and fall out the bottom. We could go out the top, but with how weak we're starting to look, I am less than convinced we're going to see substantial moves to the upside unless we get some announcements for Bitcoin. Other than that, you can... What was that? You can also look at this level here. Is this where I drew... Why do I keep doing that? I'm trying to see, is this where I drew it earlier? Yeah. So as you look here as well. Okay. It doesn't have to go back to there, but I just did, because why not? Whatever. This is another trend resistance, if you've noticed. It's pretty much drawing like a perfect line. You had a hit here, a little bit of an overshot there, a hit here, and a hit here. Downward trend with the highs overall, short term. Making lower lows, making lower highs, and starting to get trapped under the 36,000 resistance. All things pointing towards bad things about to happen here, if you do your technical analysis. All signs pointing towards bad things about to happen to Bitcoin. So I would be preparing, if anything, for a dip on the Doge side, because that's the way it's looking. In summary. Much more likely that we make maybe one more bounce here, two, fall out the bottom, if we even recover here, because it's still looking relatively weak. First and foremost, will this pass this mark? Kind of this general area. Will it even have enough strength to get above that? Let's see. Let's throw Doge back up. But yeah, guys, it's just not looking good. So now we'll go Bitcoin short term. And notice the weakness already as it hits this level. That is terrible. Now it might go through, but that is still bad. Why was there a pullback right here? After it hit the support, it should have took off. It did like multiple like 4 or 5 pullbacks already. Wrong cut. Weak. All right. Meanwhile, now it's trying to gain some momentum. Let's go take a look at some of these other things. So, I think Michael, or was it Preezy? Or both. Real question, where's Elon? Elon is hibernating, man. But that is the real question. What other cryptos do I think are a good buy right now? Right, so that was Michael's question. And then we can also address Preezy's statement on becoming the market leader. Even though he was joking, I think. Still something we can talk about. So, coinmarketcap.com. Now, I'm still doing research on some of these altcoins because there are so many that it is very overwhelming, and it gets a little hard to figure out which ones are which, and which ones are like not scams, which ones are meme coins, whatnot. I would say a good way to start figuring out which ones are worth your while, just look at the market cap. The higher the market cap, the more value people have assigned to these coins. So if you just take that as your first level answer to that question, maybe look at the top 20 or something. Top 20, top 25, something like that. Maybe top 30. Not Shiba. Maybe the top 31. Yeah. When are you making your own coin? We need a Super Mario coin. Dude, I'm actually looking into how you get started with the crypto. They're just so complicated. I would have to learn stuff that I do not know. So I don't think I'm going to do that, but it would be cool. Let's take a glance back. Okay, finally. All right, but will it pass this point? Yes. That was concerning. I don't like that at all. We'll see. We'll see. Another sign of weakness here at the main area that all the candles were hitting. Haha, Elon is going to chill until the dust settles. That's the way it looks. He's just sitting back, sipping on a mimosa, watching the world burn in his billion-dollar estate. Jazz lo-fi. All right, Bitcoin. Finally, some momentum here. Maybe Doge will see a little bit of movement. I need to clean up my chart. Hurts my eyes to see all these lines. Yikes. There we go. You funny. So going back to coinmarketcap.com, just start looking at the top market cap ones. The reason I say that, they have to be some of the more valuable ones because people allowed value to be assigned to them for some reason. So if you at least keep it to like the top 15 to 20, that should eliminate most of the meme coins, because obviously Shiba's in 32nd place, and at this moment, I mean, it's not even doing that great. So maybe you don't want to go back that far. But probably just start with the top 15 to 20. There are some others down here that I can tell shouldn't be back here. Cosmos is another one that's not a meme coin. Pancake Swap, Thorchain, Compound actually seems pretty decent. So some of these, I mean, you'll have to just do some extra research, probably the top 20, I mean the top 50. And then, but you could probably safely start with the top 20 without doing any filtering. But I'm just saying that because market cap is how many coins in circulation times what price are people paying for it. So if people are actually paying a price per, like willingly, that drives the market cap up that high when they don't have to, that means that obviously people think it's worth something. Hey, new here. Madison. Welcome back to the stream, Madison. That was the most, like, stereotypical new to the channel question. You nailed that. Hey, good morning, Invu. The Doge wallet they claim is Elon Tesla moved all the coins to another wallet. Interesting. Now let's talk about Preezy, to answer your question more directly. Other than Dogecoin, what coins do I think are a good buy right now? 1, Ethereum. Ethereum, before the Bitcoin crash, had gotten up to double this price. It was at 44,000 something, okay? Right now, it is still low 2,000s. Before Ethereum goes back up, if you are trying to chase more of a steady growth, then a quick 2x, I mean, this is pretty close to a guaranteed quick 2x as well on Ethereum, honestly. If you're dealing with enough money to buy more than one Ethereum coin, I would say you could probably safely do that. Mariana, did I shave? I knew y'all were going to ask that. Yeah, I had to shave for something this morning. Can't wait till my facial hair returns. I feel like a baby face right now. But yes, I did. Michael Maynard. $1 million estate on Mars. Yeah. Tether is a stable coin, okay? So ignore that one. Cardano is going to be Ethereum's main competition. I would definitely do your research on ADA, Cardano, and figure out what's going on there. Because, in my opinion, Ethereum and Cardano are probably top 2 buys other than Dogecoin. If you were just going to blindly put money into 2 other ones, Ethereum and ADA. Now, third option maybe would be XRP. Like I said, I see potential there for banking, but there's a lot of other coins that are coming up that do stuff related to banking. You looking fresh, by the way? Hey, I appreciate that, man. There's a lot of other coins coming up that do that kind of thing, that cater to large-scale transactions and to larger corporations. So if you want to get into XRP, I would also start looking at some of these other ones, okay? Because I was doing some research, and there's a lot of different stuff going on. However, most of these other coins that are getting into banking are doing stuff on top of Ethereum's blockchain, okay? That's why Ethereum, to me, is like, Ethereum's the big boy. Because all of these altcoins we're looking at that are like, oh, Uniswap looks good. Oh, Polkadot looks good. Oh, Polygon looks good. Chainlink looks good. Stellar. They're all running on top of Ethereum's blockchain. Ethereum is their dad, basically. So why not also buy Ethereum? Because without Ethereum, those altcoins don't exist. They're literally made possible because, like I said in our Discord chat when I was relating the differences between the two, Ethereum, ignore the coin part. You get paid Ethereum for being a miner, all right? So ignore that part because that's really not the important part when it comes to Ethereum. Ethereum provides the blockchain and the network and the smart contracts, the ability for these other coins, these altcoins that have come up, these other coins to provide their services. And they run on Ethereum. So Ethereum's basically the highway, and these altcoins are the cars utilizing Ethereum's highway. They're driving on Ethereum's road. If there's no road, where are the cars gonna go? Or it's kind of like having a website on the internet. Like, these altcoins are the websites, and then Ethereum's Google. And Google also happens to have a website. That's basically how it works. It's like Ethereum's the holder, the housing for all of these little other services that have popped up, and also happens to have a coin as well that it pays the miners for securing the network. Polkadot, Polygon, yes. Polkadot, look into Polkadot, look into Polygon, look into XRP, and then look into some of these other ones too. If you don't know which ones to look at, I strongly recommend create a Coinbase account. If you don't have anything against it, I don't care. Like if you buy or sell on it, if you deposit money on it, whatever. Create a Coinbase account and do their free like video tutorials on each of these altcoins, because these altcoins are offering to pay you to learn about what they do. What is Polygon? What is their token? What is our future? They're like, I'll pay you $1 for each video you watch on me, and each one's 1 minute long. It's literally just free money. And it answers your questions. It's kind of dumb, but hey, whatever. I'll take it. I got $25 in free crypto from each of these for reading about what they do, which I was going to do anyway on YouTube. So, Coinbase. Strongly recommend. If you need referral link, let me know. Yes, ADA and Ethereum and Matic are in my portfolio. I like that. I've got some ADA on... Actually, I think it's on here. All right. Why does it keep signing me up? Let's see. What do I have on here? Not very much, but yeah, I did buy some ADA, like $70. And then these are all what I got for free for watching the videos. So I got Stellar, Compound, Uni. Actually, I bought Uni because I was trying to locate Shiba. All right, expose myself. I was trying to buy Shiba Inu. The Graph, Polygon, and Ample. I got those for free. I never bought Ethereum Classic, so maybe I got that for free as well. But I did buy this little portion of Bitcoin, so. But there's many, many more. Many more. What you got to be aware of, though... Uh-oh. Look at Doge. Oh, that's just so bad. It's looking bad. Where did Bitcoin fail? Oh, it barely got even back up to where it was. Yeah, that's not good. By the way, found a new YouTube channel. I'll share it with you guys in the Discord group. Very informative on just cryptography. That's where I was doing most of my research today. Finematics is the YouTube channel. Finematics, one word. He breaks this stuff down and like really gets into it. I started from the top. Lightning Network on Bitcoin from 2 years ago, still relevant. What is the Bitcoin halving? The code behind it. I mean, it's really, really complicated stuff. So if you don't care so much about the workings of like blockchain and all the technicals, I do not recommend that you even click on the videos because your head will explode. And honestly, I even was watching this, was like, do I really need to know all of this? I don't think I do. But just for the sake of me having the YouTube channel, I figured I'd take the L and start wasting time learning about stuff that really doesn't matter, just so I can really get a deep understanding of all the coins and where they're coming from, so I can give better recommendations. But for you, I don't recommend. But if you do have questions about like blockchain and all of the inner workings of it, and you do care to understand all that stuff, probably a decent place to start. Find Maddox. Check his channel out. So far, so good. And as soon as this stream ends, I will be going back to his channel and finishing up what I started. Let's see. I watched Lightning Network, Bitcoin halving. Some of these weren't stock market related, like this or this. I watched Code is Law. This talked about smart contracts, by the way, which was interesting. That's as far as I got. I did watch some of the other ones though, because I went out of order at first. Here's the thing. This video helps you understand something that's kind of important. So, Code is Law. Smart contracts explained. Basically, in this video, he starts to get into like, what is a smart contract? Keep in mind, one of the big things for Doge coming up is that Doge is supposed to be allowing and supporting smart contracts soon. So everybody's like, ooh, smart contracts, cool. That allows us to do more stuff, yay. All right, but I bet you 99% of the people don't actually know what that actually means. They're just like, oh, guys, Doge, smart contracts, big deal. What's a smart contract? Oh, I don't know. Hey, good evening, Nick, what's going on? So, yeah. But watch some videos on what is smart contracts. It's very interesting. I will tell you, there's like, in my mind so far, in my understanding, okay, because I don't know everything, but I try and learn, simplify things, and make practical application to it. That's really my end goal always. What's the practical application? And how are most people going to look at this? Why is it important? So, in a cryptocurrency and its network, there's two things that are important. The blockchain and the technicals with each blockchain. And then smart contracts, the code. What can it do? So the blockchain, how does it do stuff? And then what does it do? There's a couple different blockchains that are important. You've got really like the proof of work and the proof of stake. Proof of work kind of being the more original one, the less efficient one, the slower one. That the more expensive one, really the one that we're using today primarily, Bitcoin, Ethereum. Proof of work. You have a whole bunch of transactions everybody does. They buy, they sell, whatever. All of their transactions go off into the blockchain network. They get packaged into these blocks that need to be mined. That's the oversimplification. Miners mine the blocks for verification purposes, and so on and so forth. Takes forever, takes a lot of money, takes a lot of power, a lot of resources. Then you have proof of stake, which is a completely different model. Kind of gets rid of the whole mining thing. Much faster, cheaper, etc., etc. It's like where everybody's trying to head. Okay, so basically, that's really all you got for your blockchain. Which one of these two am I? The old one or the newer one coming out? Secondly, it's all right, well, what else can the network do? Well, being able to support smart contracts is really the start to everything. Because smart contracts basically is just smart code. Support for smart code that allows you to do actual things on the network that are worthwhile. For example, Ethereum. on their network, they support smart contracts and all these different altcoins that are coming out, and basing their altcoin on Ethereum's network is mostly because Ethereum, one, it has the bandwidth for it, well, supposedly, and two, because it has the support for the coding for that with smart contracts. So who knows what that'll mean for Dogecoin? I know in the immediate future, it probably means you can just do more with Doge. But then, I mean, what if somehow we figure out a way to manipulate Doge into an Ethereum type thing? I don't know. We'll see. With all the working that's going on right now on Doge to make it more efficient, to make it faster, to make it cheaper, who knows what's next? Who knows what people try and build on top of it and make it even better? And if we even see potentially, I don't even know if it's really possible, but I would assume so with smart contract support. These kind of like altcoins kind of being formed on top of Dogecoin. I don't know. That is my thoughts so far. But yeah, some of these things are pretty neat. So definitely take a look at the smart contracts and then some of these other like altcoins and services that are being built on top of like Ethereum's network. Very interesting, the angles that they come from. This was another video that was good from him. What is gas? So explaining like what gas is when you hear that in the crypto space, gas fees and all that. It's really complicated, but obviously if you want to learn, you got to start somewhere. So anyway, back to our scheduled programming. Hit the notification bell and select all, just like you did on this channel, I hope. See what's up in the Doge universe. This guy's getting all the press exposure. Nothing really too interesting. Am I the only person alive? Crypto hangout. Anyway, taking a look back at the price action, guys, and this isn't going to be a very long stream. Like I said, there's just not too much to talk about right now, unfortunately. And I doubt you guys want to sit here and watch my screen as I watch videos on like what is Polygon and what is Cardano and how does the blockchain work and all that stuff. So yeah, that is what I'm going to be doing next. So that's probably where I'll end the stream. But it's just not looking so great for Bitcoin. Tons of weakness here at the support line. It looks like it desperately wants to stop following the uptrend channel here and start trending sideways. And I think we're going to see that happen tonight. If I were a betting man, that is what I would be betting on. It's just not looking so good. Going for 88 this time? Nice. I like it. I like it. It's like with this extra dip from Bitcoin, we got a second chance. It's like, you sure you want to do Doge? You can do any other cryptocurrency you want. We'll give you that dip one more time. It's your last chance. Yeah, in my opinion, Ethereum, ADA. Yeah, and then if you want to do one of the others, like, wow, Polygon's actually doing really good. Really good. The graph, interesting. Compound Decred? What the heck is that? But yeah. Thank you guys so much for the likes as well. And I appreciate the support. I think what I'm going to do, if you guys want to hang around, you can. If not, feel free to, I mean, you can leave the stream or watch some other streams. I don't know, whatever you want to do. It's not going to be very interesting tonight. I did want to be here, do my 7 streams a week. I mean, you know, 7-day a week stream, just like I said, but there's just not much to report on. So if you guys don't have too many questions, instead of ending the stream right here, I'm just going to go about starting to do some of my research, watching some content on some of the other crypto related stuff. If you want to watch it with me, feel free. If not, I understand. What happened to Shiba? What do you mean? Shiba's still around. Unfortunately. Here's the thing. I need to do some looking into Shiba too. I'm actually trying to buy some just because why not? Because they are coming out with Shiba Swap, which is going to be an exchange of sorts. A decentralized exchange. All I know is that in itself, regardless of the value of Shiba Inu in itself, which is basically nothing, if there could be some value in Shiba Swap, that might, in effect, bring some value to Shiba Inu coin. Okay? If that does happen, keep in mind Shiba Inu coin, even though the problem is, yes, the coin's very, very cheap. That being said, even though it's this cheap, it's still number 32 in market cap because they made so many coins, right? This was just clearly set up to be a money grab move. They made as many coins as they could, get it into as many hands as possible, made it really, really cheap, hoping for like the maximum pump. More coins in circulation, higher price potential per coin. You get where I'm going with this. So that's the only problem. Despite this cheap price, it's still above a lot of these other ones that actually have some relevance, like Compound, Terra, Cosmos, you know, XTZ. So so bit of a problem, but I still think Shiba could have some potential if Shiba Swap actually brings some value. My problem with Shiba right now is that Shiba Inu coin brings 0 value. It's literally just a meme coin. Now, if they can do something else, okay. I'm not the kind of person that is biased and is just going to say like, oh, I don't like Apple, I like Android, or Android versus Apple, or I don't like Shiba just because I'm saying I don't like Shiba, which means I'll never like Shiba. If something changes that makes me like it, okay. At the moment, Shiba is absolutely useless. With Shiba Swap, we'll see. So I wouldn't mind in advance just knowing that behind Doge, the only other meme pump potential coin is going to be Shiba Inu, that is probably the highest chance where if I kind of YOLO'd some money in, that I might see a big return. That being said, I don't expect much from Shiba, right? So I'm not going to put any money in there that I don't care, wouldn't care if it caught on fire or something. So that's the way I look at it. But I will be doing Shiba. Keep it also, if you don't know, because I had to find this out the hard way, it is very, 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 very hard to buy Shiba Inu in the US. You have to go through a lot of hoops. You can't buy it directly through an exchange. I think crypto.com technically will let you. That might be the only one. I tried it on Binance, but it's not in Binance US. I tried it on Coinbase, but it's not in Coinbase. You actually have to create a wallet and then go through like Uniswap or something, a decentralized exchange like that, and then like manually add Shiba in as one of the coins you want to transfer your Ethereum to. It's like unnecessarily complicated, but that's half the reason why I haven't gotten any. But the good thing about that is that could be half the reason why other people in the US haven't gotten any. So if Shiba catches some traction and I'm in now, and then they make it easier to buy Shiba, the price will naturally jump, regardless of if the coin has gotten more value or not, because more people will have access to it and might give it a try. So in this dip portion of Shiba, all right, this is my my big brain play in my head. The post-hype runoff, the sell-off right here, it looks to be consolidating somewhere in whatever amount of cents that is. I'm not even going to try. We'll just say it somewhere around 7,700. Okay, we'll go with that. Seems to be consolidating somewhere around 75 to 7,800. It's not really falling off. It looks like it might have hit its bottom and it's just chilling here. So, in my opinion, might be a good time to YOLO a couple bucks in there. And then check back next year and just see, did I lose my couple bucks or am I a millionaire? You know. Thanks for the update and current info. Yeah, absolutely, man. Thanks for hanging around, Gilbert. My buying power is running dry. Going to sit on the sidelines this weekend. Hey, I hear you on that. My buying power is expended, brother. I'm right there with you. Bitcoin's, yeah, still looking bad. So what I'm going to do here is... because I want you to be able to see the charts, obviously. Do you really want to see the charts, or do you want to see the YouTube video? Because I can either try and half it, or just full screen the YouTube video. I assume most people are looking at the charts on their own device. Or we could just keep flipping back and forth. I don't know. But Bitcoin's about to drop. That's the thing. It's the way it's looking. I will make the executive decision that we'll jump back and forth until someone gives an answer in chat. How about that? So I'll pause the music. And let's go. Let's get started, baby. Half and half? Okay.
Evening's Coin. If you've not subscribed, make sure you subscribe. 400,000 subscribers in 1 year, a YouTube record. Next stop 1 million. Subscribe right now. This is the fastest growing cryptocurrency channel on YouTube. Away we go. Also, like this video and share these videos on Facebook, Twitter, Reddit, and Instagram. Tell people to come on over. The way we do it on this channel is very simple. I'm here to make you money. I'm not here to be a fan of a coin. I'm not here to be part of a community.
Oh, sounds like me.
Or an army. I'm here to make you money day one. And whether it's trading or holding, we do it all on this channel. We are not advocating just one position or one time, and we're not fans of just one coin. I cover them all. Let's get to the details starting right tonight. There are two indicators that I've always used in the last 3 weeks to signal whether we are potentially heading to another market bottom. They are the following. 1, Bitcoin under 35,000 for more than 24 hours, or 2, Ethereum under 2,500 for more than 24 hours. If either of those two events are triggered, then I always warn viewers that we could be going lower, not higher. Well, in the last 24 hours, we've seen that. Now, while the coins are going up and down between those two levels, about a couple $100, we've generally been under at least one of the two of those coin positions throughout the day. So while the market is up Sunday, before I go over why this is a strange occurrence, while the market is up Sunday,
Why not both? All right.
still causing alarm signals.
I've got both loaded up right here. Maybe I'll do... trying to get a nice scale here. Maybe 15-minute Bitcoin. Here's the thing. This is all we need to see. Where's the freaking support line? Support channel. This line disappears on lower time frames. That's my pet peeve with Weeble. Trend lines don't stick on lower time frames. So basically, I don't really care if it fails the trend line. I want to see if we head towards the 33.5 level. So 15-minute time frame on Bitcoin. Looking at these candles here to see what happens. And then just keeping an eye on where that puts us on Doge. Oh, yikes. That should be sufficient. And now let's go back to Finematics. And let's make our heads hurt a little bit. If you are not interested in your head hurting, I won't be mad at you if you go to sleep. This is just my fair warning. That's pretty much all the technical analysis coverage I have for you for tonight. Appreciate you for hanging out if you gotta go. Now we're gonna get into learning here, the less interesting part of the stream. We'll just be watching other people's content and reading other people's articles, explaining what the heck is the blockchain? What is cryptocurrency? What are all these different cryptocurrencies? Why are they good or bad? To me, it's interesting, but I understand if it's not for you. Also, long story short, Bitcoin halving. The last Bitcoin mined is supposed to be 2141. Did I read that right? Can't remember. Let's go back to this video. Actually, let's actually skip that for now. Watch that though if you're interested. It was very interesting. How do liquidity pools work? This is also very interesting and is very important if you're trying to get into the crypto space. And it's complicated. Ampleforth. So this is another crypto that you can buy. Maybe let's watch liquidity pools explained and then Ampleforth.
So what are liquidity pools?
I'll turn the volume up as well.
And why do we even need them in decentralized finance? Also, what are the differences between liquidity pools across different protocols, such as Uniswap?
Change my mind. Let's do Bitcoin halving first, because a lot of you don't know about the Bitcoin halving, and this is kind of what makes Bitcoin so valuable. So if you don't understand the halving concept, it's important, and it should answer your questions on why Bitcoin is #1 market cap and why Dogecoin is just not the same, okay, because it doesn't do this. The difficulty of mining over time, the reduction of coin over time, the halving, all that stuff. They're all tied together, all three of those things I just said. And it's what increases the value of Bitcoin and makes it a deflationary coin. Dogecoin is just a cryptocurrency coin that we decided we wanted to use. Has none of these technicals.
So what is Bitcoin halving?
Oh my God.
Bitcoin halving is an event that reduces the supply of newly produced Bitcoins by half. It occurs every 4 years, or to be precise, every 210,000 blocks, and it's a part of the validation logic in the Bitcoin source code. Bitcoin halving is important to discuss as it affects miners' profitability and often has an impact on the Bitcoin price. It's also one of the main reasons why Bitcoin is perceived as sound money, with the inflation rate steadily trending to zero and becoming deflationary in the long run, in opposite to all the other fiat currencies. To understand it better, let's quickly recap how miners are being rewarded for validating transactions on the Bitcoin network. Transactions on the Bitcoin network are validated and confirmed by miners using a consensus mechanism called proof of work. In proof of work, miners are constantly validating transactions and grouping them in blocks. To prove that they did all the necessary work for the proof of work algorithm, they try to solve a simple but laborious mathematical problem. The first miner who finds the correct solution submits a newly created block to the network and is rewarded for the hard work with a block reward. The block reward consists of two elements: transaction fees and block subsidy. The block subsidy is the number of bitcoins that is the exact subject to the Bitcoin halvings. In January 2009, when the Bitcoin network was started, the first block, called Genesis block, was mined. According to the algorithm, the block subsidy for the
Can see here just at a glance that Bitcoin is trying to hold this level right around 34.6, which is also right around the trend line support, but it's still weak. Still weak.
The first block started from 50 bitcoins, which was an arbitrary number chosen by the creator of the network, Satoshi Nakamoto. In November 2012, Bitcoin went through its first halving at the block height of 210,000, where the block reward cut in half from 50 to 25 bitcoins. At that time, there was already 10.5 millions of bitcoins in existence. The second halving happened in July 2016 at the block height of 420,000, with 15.75 millions of bitcoins in the circulation. The third highly...
So, if you're not catching on already, if you just take a look at the math and kind of what ends up happening with the halvings here, as you can see at the beginning, there were less coins in circulation, and so the reward for mining blocks and whatnot was higher. Then, and keep in mind, the reward, when you get paid a reward as a miner, those bitcoins that you get as a reward are created basically out of thin air. So that's why the total supply of bitcoins goes up. Now, of course, just like with anything, when you can just create more of them, kind of like think of it as like the stimulus package, right? When basically we just said we need money, we're going to print $2 trillion and give it out. Because we just created more of something, of a limited supply, just created more, the existing supply tends to lose value because now there's more of them. It is less rare. That's just how things work. So at this time, there were less bitcoins and they were creating more. Then as time went on, they made created X amount of bitcoins, paid those to the miners. Then they did the halving. Now you get half the reward for mining blocks. And then 4 years later, they cut that again in half, the reward. So as the supply goes up, the amount that they create and give out goes down. And so that puts a limit on just the creation of all these bitcoins out of thin air. So it just starts to get harder and harder and harder to earn bitcoins for work. So from that degree, it becomes more, each Bitcoin becomes more valuable, and it also starts to limit the supply because coins get created slower, less often, since there's less of a reward. So over time, it just gets harder and harder to get Bitcoins from mining. And the value of each coin starts to go up because of that.
Anticipated halving will be happening in May 2020 at the block height of 630,000 with 18.375 millions of bitcoins in the circulation. After that, Bitcoin halvings will be occurring every 4 years until roughly the year 2140, when the Bitcoin blockchain reaches the final number of 32 halvings and stops rewarding miners with block subsidy.
Bro, why does your face look like a boiled egg? What?
So they will have to rely solely on the transaction fees. There are a few main reasons why Bitcoin halving matters. Let's dive into some of them. Sound money theory. Bitcoin halvings create controlled issuance of Bitcoin, the currency, with predictable inflation and eventual deflation when all Bitcoins are mined. The current inflation rate is at around 3.6% and will decrease to around 1.8% after the third halving. The inflation rate will be decreasing until 2140, when there will be no new supply of Bitcoins. After that, Bitcoin becomes deflationary, as some of the already existing Bitcoins will be lost. Price impact caused by a supply shock. Assuming the demand for Bitcoin stays the same and the supply is cut in half, it should cause the price of Bitcoin to go up. With the current supply, the market is able to absorb 1,800 new Bitcoins per day, considering that most miners sell their rewards instead of hoarding. After the halving, the amount of newly created Bitcoins will drop to 900 per day. If the demand stays the same, it should increase the price of each coin. Bitcoin market of course, is not that easily predictable, and even though previous halvings had an impact on the price, there is no guarantee
So basically what it's saying, each time there's a halving, I mean, if you still have the supply, I mean, the demand for Bitcoins, and the supply just keeps getting cut in half every 4 years, the value of the existing coins starts to go up. So instead of it being inflationary like the US dollar tends to be as we continually print a certain amount over time, it's deflationary. So the value of it starts to go up. It gets more and more scarce, especially once we reach the or
happen again.
it's
on the
more
transaction.
anti-inflationary than
The amount of new
it's less inflationary than the US dollar. But once we reach the last halving, and when the last Bitcoins get really paid out to people for securing the network, then the value of those coins will, the closer we get to that point, the more that the value goes up. So it really becomes a deflationary coin, if anything.
newly created bitcoins will drop to 900 per day. If the demand stays the same, it should increase the price of each coin. Bitcoin market, of course, is not that easily predictable, and even though previous halvings had an impact on the price, there is no guarantee it will happen again. This is also broadly discussed in the Bitcoin stock-to-flow model, which can be used to try to predict Bitcoin future price based on the current stock, coins already in existence, and flow, issuance of new coins. Rewarding early adopters. To incentivize the early adopters and help with bootstrapping the network,
What if I can
the inflation rate was the
find it
highest
easy?
at the time of starting the network. This means that early miners
Let's
were able to receive the highest rewards and accumulate more bitcoins. By looking at Bitcoin money supply, we can see that at the time of creating this video, 18 out of 21 million bitcoins were already mined, which again incentivize early adopters. Now, let's get a bit more technical and jump into the code that is actually
Let's see if we can see anything from this Bitcoin stock to flow model to see a price projection. Whoa. Oh my goodness. I don't know if you guys can see this, but this is just the price, the stock to flow model based off of the supply and demand, everything, all the fundamentals of Bitcoin. This is what I'm talking about in general though. When you guys ask me like, is Doge going to stay down forever? Bitcoin crashed. Bitcoin's never going to go back up. Is it stuck at $35,000 per Bitcoin? And does that mean Doge is now worth only 30 cents for eternity? The complicated way that Bitcoin is set up, it is created to increase in value over time until it reaches a point where there's no more Bitcoins being circulated, and the supply is at its absolute maximum, and it's at its max potential. Over time, as that supply has continually got more limited, and as they've done halvings and all that stuff, you see the price just jump and jump and jump. Here we are, right here, at about 30-something thousand. And this is just May, right here. As we get just to the end of the year, the price projection is already at $100,000. Hey, Carson, welcome to the stream, bro. Thank you for the donation, and welcome back. It's been a long time. I know you've been busy on that Forza grind, according to Discord, but hey, we won't talk about it. But anyway, look here. Just look at the projection for the end of the year. Even the next couple months, saying that Bitcoin should be doubled where it's at right now, and then getting back up to its projected target of 100,000 by September. So will Doge recover? I'll let you answer that from the graphs.
responsible for the Bitcoin halving.
Appreciate that donation, Carson. Hopefully your bank
This
account's
code
good.
snippet is taken from
And
the
have a
Bitcoin
repeat.
Core GitHub repository from the validation.cpp.
Also, Bitcoin, if you take a look at the left of the screen, you'll see some bad things happening.
File that is responsible, as you may guess, for validation. I will put a link to this piece of
All right,
code
we'll
in the
skip this part.
description box below.
If you want to go over this part, just watch
It's a
his video.
take
But he starts
byte
going over all
that
these complicated
will
formulas.
think the right.
Don't need
This
to watch
means
that.
Bitcoin mining 100 work and its monetary system. It allows for predictable, decreasing inflation rate of the currency and incentivize early adopters to bootstrap and secure the
Oh,
network.
another 199. Dang, bro.
If you want to learn more about
I just
Bitcoin
made
and Bitcoin
600 today
halving,
from raking the
please
ladies'
check
yard.
the links
What?
in the description box below.
I'm sorry. What?
If you have any questions
thank you for
regarding
the
Bitcoin
donation
halving
again.
or any suggestions for the
Oh,
next
what
videos,
the heck, bro?
please comment down below. And also, visit my website,
Ranking?
finematics.com.
Is that it?
If you like the video,
Did you have to sell your soul as well? $600? Carson going crazy with the donos already. Just jumped in. First word was with the donation. Okay, Carson. So that appreciate that a lot, man. Thank you. But yeah, that's Bitcoin halving. That's why Bitcoin goes up in value. I'm sure you can watch another video on that that's a little less complicated, but over time, about every 4 years, the reward for mining Bitcoin gets cut in half. That means that every 4 years, the supply of Bitcoin that's getting created gets cut in half, which means that there is just less increasing supply, which naturally makes the price of it go up because it just becomes more and more and more rare and harder to get every 4 years. That's the Bitcoin halving, summarized in 10 seconds. She wants me to pressure wash for 300. Dang. Dude, another 199? Carson, bro. Pace yourself, my guy. Thank you. I appreciate
so
it.
what are liquidity pools? How do they work?
She's just throwing
and why
money.
do we
That's
even need
crazy.
them in decentralized finance?
Thank you for that donation.
Also, what are the differences between liquidity pools across different protocols, such as Uniswap, Balancer, or Curve? We'll be going.
This is talking about what is liquidity pools. When you go to like a decentralized exchange, you start seeing things about pools. It's kind of important to know what pools are, just so that you're not lost as soon as you get there.
Through all of this in this video. Before we start, if you're new to DeFi, you may want to watch my introduction to decentralized finance.
To give a little, because I did watch, and thank you for the likes. Whoever's liking this up, I appreciate that. Just got us to 15. Big thanks there. To quickly summarize what this video is about to talk about, because I watched it already and I do need to watch it again because this stuff is complicated. He does summarize in the description. Liquidity pools, in essence, are pools of tokens. All right, following? Pools of crypto, pools of tokens that are locked in a smart contract. They are used to facilitate trading by providing liquidity and are extensively used by some of the decentralized exchanges. So basically, smart contracts. Did we watch that video together? I don't think we did. We should watch that probably. First, smart contracts are just code. Smart code in this whole crypto space, the decentralized finance space. They are smart code that lets you run these automated systems, and in these cases, like financial systems, without the need for a middleman, because all of the factors, what to do, like if this, then do this, or if this amount of money is put in this account, generate 0.25% interest, like all of these rules are built into the smart contracts. So it's really just the smart code that allows decentralized finance to really work and do things smartly without the need for a person to be facilitating those actions. So let's actually go to the smart contract video. Where was it? Am I blind? Code is law. Here it goes.
Have you ever heard the expression code is law, where technology is used to enforce rules? In that case, do we even need lawyers? Or maybe we can live in a fully automated world where code dictates what we can and cannot do. With the current development of smart contracts, this futuristic scenario may be closer than we think. A smart contract is a piece of code that can be executed automatically and in a deterministic way. The smart contract code is usually stored and executed on the blockchain to make it trustless and secure. Smart contracts also have capabilities of receiving, storing, and sending funds, and even calling other smart contracts. They follow if-then semantics, which makes them fairly easy to program. Smart contracts aim at removing the human factor from decision-making. The human factor is often proven to be the most error-prone.
Alright, let's just pause, take a look at his graph that he drew out here. Smart contract, what is it? It's basically a piece of code that can be executed automatically in a deterministic way. So in advance, codes are already pre-built in. If this happens, do this. And what it lets you do is receive money, store money, send out amounts of money automatically, as someone at my place of employment likes to say, automatically without the need for a person there, because it's already coded into the smart code, the smart contract. So it's basically this kind of bank that can run itself to make things simple. And of course, it's going to be safe, secure, because that whole bank, the whole smart contract, the code for the bank to run is all stored and executed on the blockchain, which is, of course, the whole basis for the whole secure network.
An unreliable element of the standard traditional contracts. A vending machine comes very often as a good analogy to a smart contract, as it shares some of the similarities. A typical vending machine is programmed in a way that allows certain actions and state transitions based on the input. It also works in a fully deterministic way. For example, if you want to buy a can of Coke that costs $2 and you only have $1, no matter how many times you try, you won't be able to get the drink. On the other hand, if you insert $3, the machine will give you a can of Coke and appropriate change. Even the change that is given is selected in a predefined and programmed way, based on which coins are available and which coins the machine wants to get rid of first. A smart contract can rely purely on the information available on the blockchain. For example, if you give me 10 tokens A, I'll give you 10 tokens B. Or it can rely on an external data source, for example, on the Ethereum or S&P 500 price. The latter example makes smart contracts more difficult, as they have to trust real-world data. The needed trust can be minimized by using Oracle services, but even the Oracle services have to be trusted. There are already a few projects that, by using certain incentives, make oracles more likely to provide correct data. Chainlink is a project that clearly stands out in this category. Ethereum is
Chainlink, number 14 on CoinMarketCap. That's what I'm saying. It's good to watch some of these videos and just figure out, like, what do these things do? Because you see all these names here. A lot of them just aren't like you kind of have to expand your mind. They're not just like these coins that could be competition for Doge. Oh, do we want to pay with Chainlink? That's not really what it's about. It's like, what do these things actually do? A lot of them are just like services, financial services that are built on top of Ethereum's network that reward their team of like people, whoever's securing it, whoever's mining, doing like the work, rewarding people with a coin a lot of times. And then you see the price of that coin here. That doesn't really tell you like what they do.
a good example of a blockchain that supports smart contracts and make it possible for a programmer to implement their own smart contracts. A smart contract can be written in a programming language called Solidity, which was created specifically for that purpose. In Ethereum, all the deployed smart contracts are immutable. This means that once deployed, they cannot be modified, which creates certain risks that we're going to discuss later. Smart contracts on Ethereum are also decentralized, which means there is no single machine controlling the contract. In fact, all the nodes on the Ethereum network store the same contract with exactly the same state. Although Ethereum is currently the most popular general-purpose smart contract platform, it is not the only one, and it has a few competitors. Some of them are Cardano, Tezos, EOS, and Tron, but not all of them share the same characteristics. Cardano is currently the most popular general-purpose smart contract platform. It is not the only one, and it has a few.
This is what I was talking about. So Ethereum, like you said, the most popular general-purpose smart contract platform right now. And that's why you have all these other like services built on top of it. A lot of these coins that you see listed on CoinMarketCap are things that play off of the Ethereum network that allow you to do special things in relation to finance. Like some of them, like Compound, for example, lets you like invest your money and generate compound interest in some really weird kind of way. Then there's another one that lets you do this weird borrowing thing where you can stake like a certain coin, invest that, and then you can borrow any kind of other coin that you want. Really just weird stuff, but it's cool. But it's just taking advantage of the smart code, the smart contract platform, which is kind of what Ethereum is providing for these guys to play off of. Now we're seeing these other competitors in the space that are providing a platform, a smart contract platform for others to build off of. And then he goes about naming some of them
are
Cardano,
Cardano, Tezos, EOS,
Tezos,
and
EOS,
Tron.
and Tron. So if you go back to looking at the list, hey Schmicky, what's going on, man? Welcome to the stream. Here they are. Here's EOS number 23, smart contract platform. Tron number 24, smart contract platform, and Tezos number 36, smart contract platform. So when you do research like this, you start to figure out like why the heck are these guys listed in the top 50? Some of these are exchanges. PancakeSwap lets you swap. Some of them are coins for retail, like Doge. Some of them are coins for storing value, like Bitcoin. And some of them are just like platforms that happen to have a coin, but that are made for, a bigger purpose, like creating this network for other alternative coins to play on top of, like Ethereum, Cardano, Tron, EOS, Tezos. So this research really like opens up your mind to like how this whole space kind of is trying to work. Now, with Dogecoin accepting smart contracts, then it makes you think, does Doge have potential to start getting into this kind of space? That's the question.
But not all of them share the same characteristics. The term smart contract was coined by a well-known cryptographer, Nick Szabo, in the early 1990s. The name, although not the most self-explanatory, stuck and is commonly used especially in the blockchain industry. To see the benefits of smart contracts, let's compare a hypothetical smart contract to its equivalent in the traditional space. Let's say we want to write the following contract. If Alice sends X number of tokens A and Bob sends the same number of tokens B, the tokens will be swapped and Alice will receive Bob's tokens and Bob will receive Alice's tokens. In a non-smart contract world, one way of achieving that without Alice having to trust Bob and Bob having to trust Alice would be to create an escrow contract with a third party. The third party would collect tokens A from Alice, wait for the same number of tokens B from Bob, and send Alice and Bob their respective swapped tokens. This approach already shows a few problems that Alice and Bob may be facing. Trusting intermediaries. There is no guarantee.
Just pausing real quick. This portion goes into kind of the whole purpose of decentralized finance. Being able to, well, why you should remove the middleman, or, why some people believe you should, which is why decentralized finance has come into play with cryptocurrency. Decentralized meaning kind of removing any kind of middleman and taking that completely out of the picture. So then trusting the person in the middle, getting rid of them. So if you completely get rid of that whole factor, needing to trust somebody, needing to pay them a fee to do the work, all of that. If you remove them, how can you then go about a transaction exchanging coin with, me to you or you to me, or me paying you for something? How can you do that without someone in the middle playing that middleman, like a bank, making sure that the transaction is secure, making sure that both people have the money to make the transaction go through, or the asset, whatever's being exchanged, and all of that stuff? How can that happen without a person there, and make sure that everything is cool and everything gets authenticated the right way and nothing goes wrong? So that's where the smart contracts comes into play. Really just think about it, the smart code. If you just don't think about the word contracts, the smart code in the crypto space, it takes the place of the banker and automates all the different things, all the rules, in order for this transaction to go through properly. We're going to do this, and this. Once you put the money in, we go through all these checks, and so on and so forth.
That the third party will not run away with the tokens after receiving funds from Alice and Bob. We have to rely on the reputation of the intermediary and potential insurance. This approach is not deterministic, and if something goes wrong, it may have different outputs depending on multiple factors, including the jurisdiction where a potential case would be settled in. On the other hand, the smart contract would work in a fully automated and deterministic way, making sure that both of the parties receive funds when they meet the initial criteria of depositing coins. Smart contracts can also hold funds within themselves, which is just not possible to achieve in the traditional world.
Quick pause to let you know Bitcoin is also not doing so great. It is now falling down a little bit towards low 34,000s, and Doge is just kind of hanging on for dear life at 29.5.
Speed. Depending on the intermediary, Alice and Bob may have to wait even up to a few days or weeks to settle the transition of tokens. What if they want to swap tokens on Sunday? Is the intermediary even operating? With smart contracts, these kinds of problems go away, and a contract can be fulfilled seconds after the initial criteria are met. Cost. Traditional contracts are not only expensive because of the intermediary that have to make their profit, there is also a huge risk of hidden costs for things like arbitration and enforcement if there are any problems with the contract. Reusability. The same smart contract that is responsible for swapping Alice's and Bob's tokens could be used by anyone else who wants to swap tokens. In the traditional world, they would all have to sign separate contracts and pay their respective fees to the intermediary. Fraud. This is yet another hidden cost, this time for the intermediary itself. The intermediary would have to make sure that both Alice's and Bob's tokens are legitimate before initializing a swap. Fraud is very common in traditional finance, and most companies have huge teams working purely on preventing fraud. With smart contracts, the tokens can be verified on the blockchain, and with digital signatures, it's clear straight away if both Alice and Bob are eligible for spending their tokens.
Eligible.
Smart contracts have a growing number of use cases, ranging from payments and decentralized finance to supply chain and crowdfunding. Smart contracts are also the basic building blocks for decentralized applications, or dApps. Let's talk about a few examples of smart contracts.
So this is the cooler part. Well, maybe not really, but the secondary part. So we already talked about how the smart contracts allow you to kind of exchange money and all that. It gives function to cryptocurrency, to a particular cryptocurrency. It allows you to write this code out to let you like transact with it without really having to go through all these other hoops. Then you get some of the use cases on top of that. So DApps, decentralized apps that you can also run. So this what's next.
Decentralized finance, or DeFi, is one of the new industries that rely heavily on smart contracts. Some of the things that have been already built in this space include decentralized stablecoin. With a clever use of smart contracts and certain incentives, we can create a stablecoin that is pegged to the US dollar without having to store dollars in the real world. MakerDAO is one of the companies that makes it possible.
Maker.
Automated liquidity provisioning. A set of smart contracts can allow users to provide
Number
liquidity and swap tokens in a complete, permissionless, and decentralized fashion. Uniswap or Kyber network are good examples of such protocols.
All right, this is the next part. Now he's talking about liquidity provisioning. This is good because the next video talks about liquidity and what is it. So let's just watch that part one more time.
Is one of the companies that makes it possible. Automated liquidity provisioning. A set of smart contracts can allow users to provide liquidity and swap tokens in a complete, permissionless, and decentralized fashion.
Provide liquidity. So basically, I mean, if you think about what liquidity is, I think everybody should know. I probably shouldn't have to explain that. So you can contribute to providing liquidity, giving funds so that people can use those funds for whatever purpose, and then in exchange, usually you get some kind of reward. Doge, yeah, Doge is... Hey, Heavysack, welcome to the stream, man. Doge is doging, 29.60. Not really doing too much yet. It's really just keeping an eye on Bitcoin to see if this is going to be a green candle, but we'll see. So yeah, automatic liquidity provisioning, taking your own crypto, holding it, agreeing to hold it in like an exchange or something so that others can use that for whatever reason. And in exchange for that, while you hold it there, you usually will get some kind of reward, some kind of like interest accumulation or something on your money that you've kind of staked. And then also the ability to swap tokens in this decentralized environment.
Uniswap or Kyber network are good examples of such protocols. Another use case is providing more transparency to the supply chains, where protocols like Origin Trail comes to play. When it comes to crowdfunding, you can imagine a contract that unlocks funds as soon as certain goals are met and verified by the community. This doesn't stop here. Time for a bit more futuristic examples. What if smart contracts could facilitate things like ride sharing, apartment rentals, and much more? How about charity? You can imagine a fully automated fund that would send money directly to the people who need them the most.
Now, I thought this was interesting. This, to me, is the most interesting part of it. Being able to create these decentralized services where, based off of smart contracts and secure ones that we could trust, making sure that by going through the smart code, the smart contract, the automated system with no person there, that you can do a thorough, proper exchange, service for funds, funds for service, and eliminate the fees in the middle. For one, I think about, see, it says apartment rental and ride sharing. I think about car rental. Imagine being able, I mean, there's I don't know if you guys are familiar with the app called Turo, where you can rent someone else's vehicle. That's today's version of taking out the middleman, because you get rid of like the enterprise or whatever, and supposedly you're paying directly to the person. But Turo takes a substantial fee as well, which almost makes it not worth it if you try and use them. Imagine being able to use a smart contract to do the same kind of thing, rent someone else's vehicle for the day, for the week, and not have to deal with the middleman taking a cut. That could be really, really interesting. And smart contracts is kind of the foundation for allowing that.
Without any intermediaries.
Secure transaction without
For
an
example,
intermediary.
the fund could determine that certain region was struck by a hurricane and redirect funds to that part of the world. For now, it sounds quite impossible, but all the necessary elements to make something like this happen are being built while we speak. The use cases for smart contracts are almost infinite, but before we can achieve all of that, we have to tackle a few problems.
What are those problems?
One of the main risks when it comes to smart contracts is something that haunts every other software: bugs. The best example of a bug in a smart contract is the DAO hack that resulted in proof that certain contracts have real-world issues that cannot be easily communicated by Oracle services. It's true that Oracle that you rent visible, I can certainly see more and more contracts being automated, especially when it comes to finance. But even in a fully automated world, lawyers can provide valuable knowledge that can be translated into code. Besides that, there is a lot of regulatory challenges when it comes to laws around the crypto industry itself.
Alright, I'm trying to just skip to the important part.
Trustless, fast, precise.
So the pros and cons here. I skipped the beginning portion, so let me just go back a second here.
The pros and cons
of smart contracts.
Smart contracts. Pros: fully automated, deterministic results, trustless, fast, precise, secure, cost efficient, and transparent. Cons: software bugs, protocol changes, unclear regulation, unclear tax. Even though smart contracts,
in my opinion, it's kind of a weak list of cons, and that's, to me, kind of a good thing. The unclear regulation, I mean, what do you really expect with a decentralized contract? That's kind of, I don't know, this whole crypto space, that's kind of the angle, that a lot of it is currently unregulated, so that's just, to be expected. Unclear tax, all right, that's just a weird one to list. Software bugs, he did make a point about a hack in the past, so okay. And protocol changes, another weird one. The pros, really good list of pros, strong list in my opinion. Fully automated, you get rid of the middleman, everything is transparent, cost efficient, which means with removing the middleman, you don't end up having to pay whatever you would have paid the middleman previously in fees, because it's also cost efficient, and then it's also secure, it's fast. No one's trusted with any of the work or anything like that, again, because middleman's gone. So it's just going through the code, step A, step B, and then you get the outcome. So yeah, that's smart contracts, very interesting. That's kind of, just if you were paying attention, one of the main things about Ethereum and then some of the other main competitors to Ethereum. Other than the blockchain, the network, and everything, you've got the smart contracts, which allow all of these other, like these apps and whatnot, to run on the network and do all these cool things as well. And it allows advanced banking, advanced opportunities that we don't really have now. We're getting rid of the middleman and getting stuff done still. I hope this one isn't redundant. What is DeFi? Let's start it off. Hopefully he covers a different topic on this one. If it sounds the same, we'll skip.
Have you ever heard
DeFi?
about DeFi?
Decentralized finance. Okay, and now, this should be interesting. Gets into Ethereum, but also Maker, Compound, Uniswap. Yeah, this is probably good. This starts to go over some of the practical application of having these apps running on these kind of networks.
Before. Are DeFi apps the ultimate killer apps in the crypto space, or just new hype?
And again, I don't mean to keep pausing, but the reason we're watching this is so that we can make sense of why some of these coins are listed on CoinMarketCap as being so valuable. And then once we figure out the underlying workings of these, why people have assigned the value to them that they have, and then which ones actually seem like the best ones, we can decide what we would want to actually invest in other than Dogecoin, and then make a good decision about that and what we think it's worth. So kind of have to start from the bottom up. And this is the boring part, but if you are as intrigued as I am, it's not that boring.
No matter if you never heard about DeFi before, or you want to make sure you understand it right, this video is for you. DeFi, or decentralized finance, is a movement that aims at making a new financial system that is open to everyone and doesn't require trusting intermediaries like banks. To achieve that, DeFi relies heavily on cryptography, blockchain, and smart contracts. Smart contracts are the main building blocks on DeFi. If you don't know what smart contracts are, or you want to refresh your knowledge, you can pause this video and watch my introduction to smart contracts video first. It's worth noticing that currently most, if not pretty much all of the DeFi projects are built on Ethereum. The main reason for this is the Ethereum's fairly robust programming language called Solidity that allows for writing advanced smart contracts that can contain all the necessary logic for the DeFi applications. Besides that, Ethereum has the most developed ecosystem across all the smart contract platforms, with thousands of developers building new applications every day, and the most value locked in smart contracts, which create an additional network effect. In fact, all the DeFi protocols mentioned in this video are built on Ethereum. Now, let's see how it all started.
So that should have answered a big question right there for those that were just wondering, like, why is Ethereum such a big deal? It's kind of the market leader right now when it comes to smart contracts and DeFi apps. The programming language apparently is the best for making these advanced programs. Everybody's jumping on it for that reason. Maybe it's the easiest to develop with, or maybe it allows currently just the most possibilities, whatever the developers see in it. Solidity on Ethereum is kind of the go-to for creating these DeFi apps. These DeFi apps are a lot of the things that you see listed on CoinMarketCap in like the top 50. Okay, so that's why I said a lot of these are based on Ethereum. Ethereum's like the network, the highway, the big daddy for all of these. So if you're believing in any of these, I mean, Ethereum's currently the enabler, so you kind of have to believe in Ethereum. And that being said, if a lot of these DeFi apps with all this high value are relying on Ethereum, that just gives Ethereum more value. So that gives even more reason to invest in Ethereum at a dip, particularly right now. Anywhere from like 1,700 to, I don't know, under 2,500 in my opinion is a good dip on Ethereum, because we know right before the market crash with Bitcoin bringing everybody down, Ethereum was at like 4,100 or something crazy like that. So as soon as it recovers, you know where it's going. So just keep that in mind. Where was it at? Let's see. Yep, 4,300. Guys, it's a $2,000 per share discount right now on Ethereum. I might have to do something with that tonight.
One of the first projects that started the decentralized see how it.
And then on top of that, the logic for the DeFi apps, The ecosystem is already developed, which is very, very important when you're getting into something. If there's already an ecosystem that's developed and built out, it just makes life easier. Things make more sense. There's a ton of miners as well. Ethereum, I believe, is the most profitable for mining in general. So you've got all of that support right now with the network. And then all the developers too. Like, it's just the place to be.
It all started. One of the first projects that started the decentralized finance movement was MakerDAO. MakerDAO, founded in 2015, allows users to lock in collateral such ETH and generate DAI, a stablecoin that by using certain incentives follows the price of US dollar. DAI can be also used for saving on Maker's Oasis platform. This recreates one of the pillars of the financial system, lending and borrowing. In fact, DeFi is trying to create the whole new financial ecosystem in a permissionless and open way. Lending and borrowing is only one part of this ecosystem. Some of the other important parts are stablecoins, decentralized exchanges, derivatives, margin trading, and insurance. Let's talk about each of the categories one by one. Besides MakerDAO that we just mentioned, there are a few other important DeFi projects in this category. The main one is Compound. Compound, at the time of creating this video, is the biggest DeFi project in the lending category.
He's saying Compound's the biggest DeFi project in the lending category. So think of this as the biggest DeFi app currently in this whole space of lending based on Ethereum's network. Now, if you have Coinbase, Compound is one of the ones that pays you the most money to learn more about it. If you don't have Coinbase, I do recommend you grab a referral link from somebody. If you need one, ask me or check the link in the description. I can give you one. But when you sign up for Coinbase, it prompts you to start like watching these videos and learning about each cryptocurrency. Not every single one, but some of them are promoted saying, like, for example, Polygon, earn $3 if you watch these 3 videos. So you watch a 1-minute video, what is Polygon? It asks you one question, a little quiz at the end to make sure you watched it, and then it gives you $1 in free crypto. And then you watch the next one, it gives you another $1 worth of Matic or Polygon. Compound has one of those, and there's 3 videos, and they give you $3, as you can see here. I did them already. $3 worth of comp per video, and they're only like 1 minute each. So kind of is a no-brainer to at least sign up to get your free crypto, even if you don't want to use them for anything else. I don't have that much money in here. Oh no, that's okay. That was just saying the price of Compound. I was like, that's not me. But yeah, even if you don't want to trade with them because of the fees or whatever you don't like, there's about $25 worth of free crypto waiting for you if you just learn about some of the different altcoins. So, to me, no brainer. If you don't want to do it though, teach their own.
With around $630 million worth of assets locked in the protocol, Compound is an algorithmic, autonomous interest rate protocol that allows users.
I'm actually going to plug that in the description. So, yeah.
To supply assets like Ether, BAT, 0x, or Tether, and start making interest. Supplied assets can also act as collateral for borrowing other assets. Another popular DeFi project in this category is Aave. With clever use of smart contracts and certain incentives, we can create a stablecoin that is pegged to the US dollar without having to store dollars in the real world. We already mentioned MakerDAO, that essentially allows the users to lock in their collateral and generate DAI. DAI is a good example of an algorithmic stablecoin. Besides DAI, there are multiple other non-algorithmic stablecoins like USDT, USDC, or PAX. The main problem with them is the fact that they are centralized, as there is a company behind them that is responsible for holding the equivalent of the value of stablecoins in US dollar or other assets. Nevertheless, these stablecoins gained a lot of popularity and are extensively used in DeFi applications like Compound or Aave. Decentralized exchanges, or DEXs, in opposite to standard centralized crypto exchanges, allow for exchanging crypto assets in a completely decentralized and permissionless way, without giving up the custody of the coins. There are two main types of DEXs: the liquidity pool-based and the order book-based ones. A few examples of the liquidity pool-based ones are Uniswap, Kyber, Balancer, and Bancor. Loopring and IDEX are examples of the order book-based ones. Similarly to traditional finance, derivatives are contracts that derive their value from the performance of an underlying asset. The main DeFi application in this space is Synthetics, which is a decentralized platform that provides on-chain exposure to different assets. Margin trading, also similarly to traditional finance, is the practice of using borrowed funds to increase a position in a certain asset. The main DeFi apps in the margin trading space are DYDX and Fulcrum. Insurance is yet another part of traditional finance that
I
can
want to
be
see if
reproduced.
DYDX. Did it say DYDX or what?
Traditional
Fulcrum?
finance and Fulcrum.
Fulcrum. I just want to see where they're at on CoinMarketCap. See if any of them are listed, because I don't recall seeing either one of those. DYDX Fulcrum. Let's take a look. If I pass it, feel free to let me know. See Bancor right here, number 87. He just mentioned Bancor. DYDX Fulcrum. You would expect, without having to go to page 2 or something, that they would be up here. Especially if they're like the only ones in the space for margin trading. That's surprising. Now, this video was made last year, so after that, there could have been other players in the game that did a little bit of a better job, so maybe that's what it is. Interesting.
Insurance is yet another part of traditional finance that can be reproduced in decentralized finance. It provides certain guarantees of compensation in return for a payment of a premium. One of the most popular applications of insurance in the DeFi space is protection against smart contract failures and protection of deposits. The most popular DeFi projects in this space are Nexus Mutual and Open. Another really important, although not strictly limited to finance, part of the DeFi ecosystem are Oracle services that focus on delivering reliable data feeds from the outside world into the smart contracts. The most popular project in this space is Chainlink. These are pretty much all the main parts of the DeFi ecosystem. They can also be combined together in multiple various ways. We can think about them as money Legos, as more complicated DeFi projects can be built on top of the existing blocks. Let's compare the main differences between DeFi and CeFi that stand for centralized or traditional finance. But before we do that, if you already made it that far, don't forget to smash the like button to help this channel grow. DeFi. Permissionless, no KYC. CeFi. Permissioned, KYC, sanctions. DeFi. Open. Open source, encouraging free collaboration. CeFi. Close. Closed source, decisions made behind closed doors. DeFi. Censorship resistant. CeFi can be censored. DeFi, cheaper, mostly network fees. CeFi, expensive, intermediaries charging hefty fees. DeFi, built on the blockchain. CeFi, built on old foundations. Before we wrap up this video, we have to also mention the potential risks associated with DeFi. One of the main risks are bugs in smart contracts and protocol changes that can affect the existing contracts. We described them in more details in the previous video about smart contracts. This is also when users can take additional insurance to lower the risk of potential issues. Besides that, we always have to check how decentralized a DeFi project really is, and what is the shutdown procedure if something goes wrong. Does someone have an admin key that can be used to shut down the protocol? Or maybe there is some on-chain governance in place to make such a decision. On top of that, we have to always account for the more systemic risk that can be caused by, for example, asset prices sharply losing their value, which may result in a cascade of liquidations across multiple DeFi protocols. Network fees and congestion can also be a problem, especially if we want to avoid liquidations and we are trying to, let's say, supply more collateral on time. Upcoming Ethereum 2.0 and second layer scaling solution can help to solve this problem.
I was about to
There's
say,
also a set
that's one of Ethereum's main problems is when there's network congestion. The fees for transactions go through the roof because of the way it's built out, but that's what Cardano is supposed to be better for, but then that's also what Ethereum 2.0 is supposed to combat as well, using similar techniques. So, yeah, that gets into a whole nother topic.
of more
But yeah, that's interesting. The thing I don't like would be the DeFi risks, because if you have to start paying for insurance because you're scared about the smart contract failing or something, or protocol change, then the question becomes, what's the difference in price between fees for running things through the smart contract and getting insurance, if it's really that necessary, versus going via centralized banking and paying the middleman? Then you need to compare fees there, as well as any potential like network fees as well. So definitely something to think about. I don't know the answer to that, but that is what just popped into my head. Compare the total fees, because when you go through a middleman, like through centralized finance, going through a bank, typically you don't really think about like insurance too much. They kind of handle that part, making sure the transaction's secure. That's why you go through them, and that's why you pay the fee. But if DeFi is going to require you to also pay for insurance to protect your money while you use decentralized banking, sounds a little counterproductive, and then it raises the question of, well, what's the total fees there versus going through a bank?
time. Upcoming Ethereum 2.0 and second layer scaling solution can help to solve this problem. There is also a set of more subtle features or changes that applied to one of the protocols may incentivize users to certain non-obvious actions that can cascade across multiple protocols. A good example of something like that would be a recent distribution of comp tokens in the Compound protocol that caused users to get into seem to be non-profitable high-interest borrowing that was actually profitable due to being rewarded in the additional comp tokens. Even though situations like that can be quite dangerous, they make the whole ecosystem stronger and less vulnerable to similar situations in the future. As you probably already noticed, DeFi is a super interesting and vibrant space that is full of opportunities. Although, we have to remember that this is still a very nascent industry, so it's a high risk and a high reward game. DeFi is the closest thing that can actually disrupt the traditional financial industry. In opposite to most of the fintech companies, DeFi is built on the new rails instead of relying on the outdated technologies and procedures. Currently, most of the financial products can be only created by banks. DeFi is open, permissionless, and enables cooperative work in a similar way to the internet. Although DeFi is currently built predominantly on Ethereum, with more adoption of interoperability protocols, we may see more projects being built on different chains in the future. This was only an introduction to DeFi. In the following videos, we'll be focusing on each part of the DeFi ecosystem.
Cool, good stuff. Like I said, I don't expect all you to stay here forever, but I figured instead of shutting down the stream while I did my next portions of my research, for any of you that were interested, just play it in the background, hang around. Or if you need to go to sleep, that's fine. Lot of stuff to cover here. I probably will shut down the stream soon though, because I'm getting pretty tired. Let me jump ahead to just like what is Polygon and all that kind of thing. Polygon Matic. Ethereum's Internet of Blockchains explained. Yeah, let's do that.
So what is Polygon, previously Matic, all about? How will it help with scaling Ethereum? Why does it claim to be Ethereum's Internet of Blockchains? And why is it sometimes compared to Polkadot and Cosmos? You'll find answers to these questions in this video. Before we begin, if you want to learn more about decentralized finance and the technology behind it, make sure you subscribe to my channel, hit the bell icon, and enable all notifications. You can also consider joining us on Patreon and learning even more about DeFi. And one more thing before we start, Finematics is now participating in round 9 of Gitcoin grants, based on the quadratic funding mechanism, where even the smallest contribution matters. If you'd like to show your extra support for the channel, check the link in the description box below. Now let's see how Polygon came into existence. Before the rebranding to Polygon, the project was known as Matic, or Matic Network. Matic started in 2017 by 3 founders, who were active participants in the cryptocurrency community in India, and decided to band together and tackle Ethereum's scaling problems. The team worked on 2 main solutions, Plasma chains and Layer 2 scaling solution based on Matic's implementation of Plasma, and a POS chain, a proof-of-stake Ethereum sidechain. The token behind Matic Network, Matic, was distributed through the Binance Launchpad's initial exchange offering in April 2019, and the team was able to raise $5.6 million. After over 2.5 years of work, the Matic Network mainnet went live in mid-2020 and quickly started attracting more and more attention. This was supercharged by the increasing gas fees on Ethereum that showed an urgent need for finding robust scaling solutions. At the beginning of 2021, the Matic team decided to expand the scope of their project and rebranded themselves to Polygon. Polygon aims at creating a more generalized scaling solution. When it comes to scaling, there are 2 main ways of doing it: Layer 2 scaling and sidechains. Layer 2 scaling relies on the security of the main layer, the Ethereum blockchain. Plasma, optimistic rollups, and ZK rollups are the most popular options. Sidechains rely on their own security models, usually by having a separate consensus mechanism. Matic POS chain, or XDAI, are good examples here. If you're interested in learning more about these different scaling solutions, you can check out this video here. Instead of providing 1 or 2 scaling solutions, Polygon aims at creating an ecosystem that makes it easy to connect multiple different scaling solutions, everything from sidechains with different consensus mechanisms to Layer 2 options, such as Plasma, optimistic rollups, and ZK rollups. We can think about the existing Matic scaling solutions, the POS and the Plasma chains, basically becoming one of many scaling options available in the whole Polygon ecosystem. Polygon also provides a framework that makes it easy for new projects to quickly build their own, highly customizable scaling solutions, if they decide this is the path they want to choose. Now let's have a closer look at the technology behind Polygon to understand the project a bit better. Polygon supports two major types of Ethereum-compatible blockchain networks: standalone networks and secured chains, networks that leverage a security-as-a-service model. Standalone chains rely on their own security. For example, they can have their own consensus models, such as proof of stake or delegated proof of stake. These kind of networks are fully sovereign, which presents them with the highest level of independence and flexibility, but it makes it more difficult for them to establish a reliable security model. For example, POS requires a high number of reliable validators. This kind of model is usually suitable for enterprise blockchains and already established projects with strong communities. Secured chains utilize the security-as-a-service model. This can be either provided directly by Ethereum, for example via fraud proofs used by Plasma, or by a pool of professional validators. These validators are run in the Polygon ecosystem and they can be shared by multiple projects. Concept similar to Polkadot's shared security model. Secured chains offer the highest level of security but sacrifice independence and flexibility. This model is usually preferred by startups and security-focused projects. As we've probably noticed, the distinction between standalone chains and secured chains is even more generic than the usual split between sidechains and layer 2 solutions that we described earlier. This allows Polygon to accommodate pretty much all possible scaling solutions. Now, as we know what kind of solutions are supported by Polygon, let's dive a bit deeper into the architecture. Polygon architecture consists of 4 abstract and composable layers. The Ethereum layer. Polygon chains can use Ethereum as their base layer and leverage Ethereum's high security. This layer is implemented as a set of smart contracts on Ethereum and can be used for things like finality and checkpointing, staking, dispute resolution, and messaging between Ethereum and Polygon chains. This layer is optional as Polygon-based chains are not obligated to use it. The next one is the security layer. This is another non-mandatory layer that can provide a validator as a service function. This function allows Polygon chains to make use of a set of validators that can periodically check the validity of any Polygon chain in return for a fee. This layer is usually implemented as a meta-blockchain that runs in parallel to Ethereum and is responsible for things like validator management, registering, deregistering, rewards, shuffling, and Polygon chain validation. The security layer is fully abstract and can have multiple implementations with different characteristics. This layer can also be implemented directly on Ethereum and leverage Ethereum's miners as validators. The next layer is the Polygon networks layer. This is the first mandatory layer in the Polygon architecture. This layer consists of sovereign blockchain networks, where each network can maintain the following functions: transaction collation, local consensus, and block production. Last but not least is the execution layer. This layer is responsible for interpreting and executing transactions that are included in Polygon's chains. It consists of the execution environment and execution logic sublayers. The main takeaway when it comes to Polygon's architecture is that it is deliberately made to be generic and abstract. This allows other applications that are looking to scale to choose the best scaling solution that perfectly fits their needs. As we know, different applications may want to optimize for different things, such as security, transaction speed, transaction cost, or sovereignty, and to excel in one of them usually means making a sacrifice somewhere else. As an example, a DeFi protocol that aims at storing billions of dollars locked in smart contracts probably wants to optimize for security and might be happy with sacrificing sovereignty. A protocol like this would most likely use the Ethereum layer. Another project, let's say an NFT marketplace, may want to optimize for ultra-low transaction costs and would be okay with making a sacrifice by lowering their security from extremely high to high enough. Such a project could skip the Ethereum layer and rely on the security layer with a set of shared validators. Or maybe a blockchain-based game wants to rely on its own consensus mechanism with ultra-fast block time. In this case, they can entirely skip both the Ethereum and the security layer and focus on the Polygon network layer. As we can see, Polygon can provide multiple options, and the teams behind different applications can decide to pick the one that perfectly fits their use cases. It also aims at making it easy to migrate from one scaling solution to another one. This might be needed if the circumstances behind the project change, or if another, better scaling solution becomes available. This architecture also allows for multiple different Polygon-based scaling solutions to communicate with each other. This is super important, as it prevents creating siloed systems. At the moment, the only scaling solution available in the Polygon ecosystem are the Matic POS chain and the Matic Plasma chain solutions. The team is also actively working on adding multiple other options such as ZK rollups, optimistic rollups, enterprise chains, and other sidechains. Currently, projects launching on Polygon start with the Matic POS and the Matic Plasma chains. Matic Plasma chains is an Ethereum Layer 2 predicate-based Plasma implementation. Plasma, in essence, is a framework for building scalable decentralized applications. Plasma allows for offloading transactions from the main chain into child chains, which enables fast and cheap transactions. One of the drawbacks of Plasma is a long waiting period for users who want to withdraw their funds from Layer 2. Plasma cannot be used to scale general-purpose smart contracts. Matic POS chain is a permissionless sidechain and runs in parallel to the Ethereum chain. The chain is secured by the proof-of-stake consensus mechanism with its own validators. Although Matic POS chain has its own consensus mechanism, it also relies on Ethereum's security when it comes to validator staking and checkpoints. Matic POS chain is EVM compatible, which allows Ethereum-based projects to effortlessly migrate their smart contracts. So far, Matic POS chain and Matic Plasma chains were able to onboard over 80 applications, process over 5 million transactions, and secure over $200 million of users' funds. Some of the projects that have either already migrated to Matic POS chain, launched directly on Matic, or are in the process of migrating include QuickSwap, a fork of Uniswap, SushiSwap, Avegochi, Polymarket, Polka Markets, and Superfarm. Besides that, infrastructure projects such as The Graph.
I did not realize SushiSwap was already on Polygon on top of Ethereum. That's interesting.
And Chainlink also decided to expand to Polygon. Recently, Polygon also announced a partnership with a big player in the video gaming industry, Atari. So far, it looks like Matic's rebranding to Polygon and the expansion of the scope of the project was a really good idea. This is mainly because it becomes clearer and clearer that there will be a spectrum of different scaling solutions available in the future. In the new architecture, Polygon can facilitate connections between these different scaling options. It also looks like there is a big focus on both optimistic rollups and ZK rollups, which Polygon can also add to the multitude of available scaling solutions. The main risk here would be if one of these popular scaling technologies gets adopted on its own without integrating with Polygon. But even if this happens, there is a chance that this technology would eventually be integrated into Polygon anyway. It will be interesting to track Polygon's progress when it comes to adding more scaling options and onboarding more and more projects. We'll also have to see how easy it will be to communicate between different scaling solutions with different security guarantees. It's also worth mentioning that Polygon's white paper has direct comparisons to other Layer 1 blockchains, such as Polkadot, Cosmos, and Avalanche, that also focus on the interoperability between different blockchains. In contrast to these projects, Polygon focuses on the Ethereum ecosystem, with the Ethereum chain being the main hub that connects everything. This, of course, has a lot of advantages, such as a strong community of users and developers, a well-known programming language Solidity, and the most popular virtual machine in the cryptocurrency space, EVM. Besides that, Ethereum has a long history of serving as a reliable base chain that handles trillions of dollars in economic activities. Something that took time to develop and is hard to be replicated by a completely new blockchain. The power of familiarity with the Ethereum stack cannot be overlooked, as shown by the recent rise of Binance Smart Chain. So what do you think about Polygon? Will this be the ultimate way of scaling Ethereum? Comment down below. And as always, if you enjoyed this video, smash the like button, subscribe to my channel, and check out Finematic's grant on Gitcoin. Thanks for watching.
Well, well, well. This is where things start to get a little more complicated. I'm too dumb for this, but it sounds lit. I need a video explaining this video. Hey, I'm almost at that point. I'll probably watch it again on my own time, but it's good stuff, guys. It's good stuff. Oh, there's me recommended. Why? That's weird. That's kind of cool. I showed up as recommended in the recommendations for myself. Master the HODL. But just shows that Polygon has a lot of potential. I mean, it's already being adopted by SushiSwap, Chainlink, and there were a host of others. And it looks like it just provides an additional layer on top of Ethereum's network, of course. That opens up, I mean, scalability, using the proof of stake method as well, which is, you know, cheaper, faster, all that stuff. Good stuff. There's so many more to learn about. That's the thing. But it looks like Polygon's definitely something to keep your eyes on. And if you look at the recent move up, if you look at the recent move up on Polygon in the last 7 days, last week, it's pretty up there. While everything else is down, Polygon has moved up 32% in the last 7 days, kind of only beat by Uniswap, which moved up 36%. And I guess there's a couple more that were above it, but not many. Not many. Engine Coin, Battery, and Decred, which I haven't even heard of either one of those. So definitely something want to keep your eyes on. Polygon. Ethereum and Polygon. Hey Mark. Hey, what's up, Brian? Saw a video saying that the dips on Doge being higher each time could be a bullish sign. Anybody that's really evaluating Doge's price action, I don't know how serious I take it. Because everyone should know, should be looking at Bitcoin's price action by now. I don't particularly see anything bullish about this price action here. If I hide all drawings, I mean, nothing really looks particularly bullish. The only thing you could say is bullish is that we're making higher lows. But, I mean, other than that, I mean, we've failed a lot of levels. We failed this level here, had a sharp sell-off. Then this level here actually became resistance. We butted our head up against it a couple times. I called you Brian? Wait, why? Sorry. I don't know why I called you Brian. I literally looked at the screen and read your name. I don't know how Brian came out. Sorry, Bryce. I'm confused. That just tells you it's late. I don't even know how that happened. Bryce. My bad. Yeah, I don't see anything particularly bullish here. If anything, it looks bearish because look at where the price action is right now. If you just draw kind of a support line here. Oh, I have drawings off. Right here. At the bottom of these wicks, then you look over to the right. It's exactly where we are right now, and we look weak at it. And it looks like we're about to fall below that line right now. So no, I don't really see anything particularly bullish. A lot of people are just making videos saying, bullish sign, looks like we're going to do this, bullish sign, when there's literally no bullish signs. Look at this. I mean, just look at this chart. We had the hit here, tried to make a run, failed, big rejection into area we should have never gotten into, came back to the level of support that we kind of agree on, moves up, failed again, came back down, failed the red line, got back to support again at 28 cents, came up. Now we're doing a double top here, and now it's become a double bottom as well. But at the 29.5 cent marker. The only thing that would be bullish is if we hold here and then we start curling up and then we break out of the top. Until that happens, I can't say anything looks bullish. I mean, there's just nothing that looks bullish. We have not made a higher high than any of the previous highs. I mean, if you look overall, I mean, we're still in a downtrend. Nothing special has happened recently. We have never broken above this kind of overall general trend line down. There's just, I mean, I can't find anything bullish to point out to you. So I don't agree with whoever said that. I see nothing bullish here. Do you see something bullish here? Am I missing something? I mean, and that's why sometimes I just hide all drawings and just look at the chart for what it is. As I look at this here, to me it looks possible that this thing does this little curve here and then like heads back down. Maybe it does a bounce and then, I mean, it could, I don't know. If anything, it's looking not great. I would love to see it hold here and curl up though. But just the way things are looking, I don't really consider this bullish. Not at this moment. Tomorrow morning, as we get a couple more candles on here, maybe something will look better. But to me, it's not looking hot. Especially when you look at Bitcoins. Like, look at that. To me, that looks like it wants to come on down. Price is wrong. Needs to dip some more. Yeah, I don't see anything good, bro. Unfortunately. I'm just going to leave my dip buying hat on. We are barely holding on to this trend line support. Look at that. Barely. I've been watching the Doge Bitcoin chart. It's been staying stable and following Bitcoin. Yeah, it has. I've been in the markets a while, and you haven't seen it. And you haven't seen a dip yet. Yeah, it's been pretty stable following Bitcoin. It's been doing a good old job of doing just that. Brian. Oh, there's Brian. Hi, Brian. I've been in the markets a while, and you haven't seen a dip yet. What do you mean? But yeah, this is it's not looking super great. Yeah, there's just nothing bullish here, man. I don't know who said it, but you can't look at this and say, "Oh, that chart looks bullish." It just doesn't. Like, you can say that there's hope, that we hold here and bounce up, and there's hope that we bounce off of here and head up. Okay, that's what you can hope for. But there is no indication that that's going to happen. We're at support, and we are like as weak as possible. And consistent lower lows the whole way down, overall downtrend. Lower highs. We've been failing through support levels and then failing to get back up to them as resistance, even just being too weak for that. It's just been looking bad. So I don't see the bullish angle. I try to, trust me, because I want the price to go up. But I don't see it tonight. Commit chain? What the heck is that, man? Oh, this is so complicated. In about a week's time, we will drop Bitcoin 10,000. Bro, please don't say that. If that happens, I might just step out the crypto market for a while. Bitcoin 10,000, dude? What is this, the pandemic all over again? There's no reason for Bitcoin to be 10,000, bro. If Bitcoin hits 10,000, it's failed all of its, not just its technicals, but its fundamentals. Bitcoin's supposed to be a store of value. Bitcoin is not supposed to be worth that little amount of money. Not at this point in time. After all it's been through with the halvings and whatnot, it is definitely not supposed to be worth $10,000. In fact, it's supposed to be on its way to 100,000 by the end of the year. Dude, you're gonna make me cry. 10,000 Bitcoin. You know what that would mean for Dogecoin, dude? It's like 10 cents Doge. Bro. That is not something I want to see. Maybe one more video and then I'll wrap up the stream. I'm definitely tired, but I know once I end the stream, I'm going to just watch these in bed anyway, so just trying to make the most of the time here. Uniswap V3. I do want to know about Uniswap V3. No, it's a dog-eat-dog world. The rich get rich. Yeah, you're hoping for it. I know you are. I'm going to just do this video on Uniswap because it's kind of what's interesting me right now. It's kind of the only way to get to Shiba. So it's kind of what's on my mind because I do want to buy just a little bit of Shiba. Ethereum Ascending Triangle. Hey, Millie Monster, what's going on? Mill Monster. Ethereum Ascending Triangle. I mean, it's doing pretty much the same thing. It's Bitcoin here. I'm not seeing too much hope. Bitcoin needs to get off this support line and reject. It's looking pretty bad. On 4 hour. Yeah. We'll see, man. I've seen 50-50 shots of, regardless of ascending, descending, pendant, whatever, it just 50-50ing whether or not it goes out the top or bottom. So I try not to get too invested in triangles. Bull flags, bear flags, that's one thing for me. W's or M's, and head and shoulders, the very clear, almost guaranteed reversal patterns. Yeah. Triangles, I've lost faith in triangles. They always do me wrong. Let me watch this. I'll play this video on Uniswap, and then that'll probably be the last one for the day. We'll just pick up tomorrow. Tomorrow will probably be a lot of streaming. We'll see. That's my hope.
So what is the long-awaited Uniswap V3 all about? How is it different from V2? Will this be a game changer when it comes to the automated market maker space? and will it launch directly on layer 2? You'll find answers to these questions in this video. Before we begin, if you want to learn more about
even know what
decentralized
V2 is, so
finance
hopefully he
and the
covers both in
technology
this video.
behind it, make sure you subscribe to my channel, hit the bell icon, and enable all notifications. You can also consider joining us on Patreon and learning even more about DeFi. Although Uniswap, as one of the core DeFi projects, doesn't need much of an introduction, let's quickly go through a few major points before we jump into V3. Uniswap, in essence, is a protocol for decentralized and permissionless exchange of tokens.
Market's no longer retail's game, so it's making trading easy. Nice.
On the Ethereum blockchain. The initial version of Uniswap was launched in November 2018 and slowly started building users' interest. In May 2020, at the beginning of DeFi summer, Uniswap launched a second version of the protocol called Uniswap v2. The main feature was the addition of ERC20 to ERC20 liquidity pools on top of ERC20 to ETH pools present in v1. In the second half of 2020, Uniswap v2 went through a period of parabolic growth and quickly became the most popular application on Ethereum. It also became pretty much a standard for automated market makers, making it one of the most forked projects in the whole DeFi space. Less than a year since its launch, V2 has facilitated over $135 billion in trading volume, an astonishing number that is comparable with top centralized cryptocurrency exchanges. You can learn more about the full story behind Uniswap v1 and v2 in this video here. Also, the concept of liquidity pools and automated market makers are worth understanding. If you need a quick recap, here is a video. Just before releasing v2, the team behind Uniswap had already started working on a new version of the protocol.
Need to watch both of those videos, but not tonight.
Details of which were announced just now, at the end of March 2021. The team decided to launch Uniswap v3 on both the Ethereum mainnet and Optimism, an Ethereum Layer 2 scaling solution, targeting early May for the release. This was clearly one of the most anticipated announcements in DeFi's history, and it looks like v3 can completely revolutionize the AMM space. So what are the main changes? Uniswap v3 focuses on maximizing capital efficiency when compared to v2. This not only allows LPs to earn a higher return on their capital, but also dramatically improves trade execution that can now be compared or even surpass the quality of both centralized exchanges and stablecoin-focused AMMs. On top of this, because of better capital efficiency, LPs can create overall portfolios that significantly increase exposure to preferred assets and reduce their downside risk. They can also add single assets as liquidity to a price range that is above or below the current market price, which basically creates a fee-earning limit order that executes along a smooth curve. This is all possible by introducing a new concept of concentrated liquidity. More on this in a second. Besides this, v3 introduces multiple fee tiers and improves Uniswap oracles. Now, let's go through some of the Uniswap v3 features one by one to understand them a bit better. Concentrated liquidity is the main concept behind v3. When LPs provide liquidity to a v2 pool, liquidity is distributed evenly along the price curve. Although this allows for handling all price ranges between 0 and infinity, it makes the capital quite inefficient. This is because most assets usually trade within certain price ranges. This is especially visible in pools with stable assets that trade within a very narrow range.
What?
As an example, Uniswap DAI USDC pool only uses around 0.5% of capital for trading between 99 cents and $1.01, a price range where the vast majority of trading volume goes through. This is also the volume that makes the majority of trading fees for the LPs. This means that in this particular example, 99.5% of the remaining capital is pretty much never used. In v3, LPs can choose a custom price range when providing liquidity. This allows for concentrating capital within ranges where most of the trading activity occurs. To achieve this, V3 creates individualized price curves for each of the liquidity providers. Before V3, the only way to allow LPs to have individual curves was to create a separate pool per curve. These pools, if not aggregated together, resulted in high gas costs if a trade had to be routed.
So we're gonna have to stop that video. A lot of things just flying over the old head of mine, which means for the majority of you in here, probably lost as well. Some of you, maybe not. Most of you, probably so. Because what he's really talking about in that video has to do with the underlying functionality of Uniswap v3, which is really getting technical, and that's going back to the whole discussion on liquidity pools and how that works. So unless you're familiar with liquidity pools and what he's actually talking about with liquidity pools, most of that video probably makes no sense to you and sounds like a different language. So you kind of got to start from the beginning and work your way there. Tried jumping ahead, didn't work. So we'll have to circle back around a little later. Skydive, you heading out? Thanks for hanging out. Sorry the stream tonight wasn't super exciting, but hopefully you guys learned something. That was kind of the plan anyway. I knew this would be more of a chill stream. Not too much technical analysis to do today. I mean, we've already done it for the last couple days and nothing's really changed. Bitcoin still looks weak. Bitcoin still looks like it wants to go down to close to 30,000, 3130-ish range, and then try and figure out what it wants to do. Hopefully, Elon will, just like he crashed the market, send out another tweet, correct the market. I don't see that happening, but he did say things were looking promising for Bitcoin when he was talking it over to the market leaders in the mining space, and they were discussing clean energy and whatnot to support the operation. So there is hope. A tweet from him could send Bitcoin flying right back to 50,000 at least, which would send Doge back up close to 50 cents, 45-ish, 45, 48, with just a little bit of room to go, and then we can be back on track for our hype tweets and all that good stuff to bump us back near 70. But in the meanwhile, we're just kind of in the bearish market right now, not having a great time, but using this time to just do some research, I guess. Well, I stayed this long, so there's that, right? True. I appreciate you hanging out for that. I'm surprised you stayed this long, honestly, but I guess that's a good sign. Learned a bit more than yesterday. Cool. Yeah, yesterday you left. It's like when you leave, that's usually when I'm also closing down the stream, because yesterday you said you were heading out, and that's literally exactly when I also said I was closing the stream down. So I'm seeing a trend. She knows when it's time to cut. Another informative session. Thanks. Good night, Doge community. Hey, Gilbert, I appreciate that. Hopefully you guys did learn something from this. I mean, if you took anything from this, hopefully you were able to figure out what smart contracts were and why they're so important, and why it's important that smart contracts are coming to Dogecoin soon, and what that could mean for the usefulness of Dogecoin. Right now, it's just a coin that we are backing to become, the equivalent to the US dollar. Basically for us, can I buy something with it? And that's it. But with the addition of smart contracts, it allows you to really start doing some crazy stuff, and building stuff around it. So that could send Dogecoin to a whole nother level that we haven't really priced in, especially at 29 cents. So really, this could be an insane dip for something big to come. And with smart contracts and with more functionality, if we can really get some functionality coming over to the Doge side, then the market cap being under Ethereum, it doesn't necessarily need to be that way. So that could open up possibilities for us to really get past the $3 hard limit that we kind of have figured out is kind of set right now, being that at this moment in time, Doge is not anywhere close to being competitive to what Ethereum can do, even though we may like it more. At the end of the day, Ethereum is a whole, not just a cryptocurrency, but a whole network that supports others as well, whereas Doge is just one by itself. But the smart contracts thing could change the whole game, so we'll see. Should be interesting. All right, guys. Gilbert, Skydive, Brian, the other Brian, just kidding, Bryce, Mill Monster, Basesh, Invu, John, Michael, anybody that's still here, Madison. Appreciate you guys for hanging out. I will catch you guys tomorrow. We'll see what the stream day looks like. It's either going to be a whole lot of streaming or not much. Probably will be partially determined by what Bitcoin's doing and Doge is doing. But of course it is Memorial Day and I don't have to work, so could definitely take advantage of that and have a good old time. Thank you guys for hanging out. Again, this channel's name is Fine Maddox, one word. How did I just start a phone call? That was weird. Fine Maddox, one word. I encourage you kind of start from the top. If you want to look at his channel and his videos, as you've already seen, they're very informative. Schmicky, you too. Have a good night, bro. And then just kind of work your way up. And there's other channels too. I'll link those kind of as time goes on. I can't think of them off the top of my head, but this is the one I'm going to watch all his stuff first and then find another channel. It's kind of what I do all the time. When I find a good channel, I just watch all their instructional videos and I go to another channel. Sometimes rewatch some of the same content, but just hear it from a different angle, from a different perspective. But yeah, there's that. And yeah, thanks you guys for hanging out. See you, Schmicky, and everybody else. Catch you guys tomorrow in the next live stream.